Open a minute to go until the start of cash equities trading for this Wednesday morning. Here are your headlines. Stocks slide amid inflation concerns as attention shifts to today's Fed minutes. Bitcoin follows the downward trend after a fresh warning from the PBOC. France gets back to business with non-essential stores and entertainment venues opening for the first time in over 6 weeks. And a leadership shake-up at JP Morgan puts 2 women in a key role and pole position to eventually succeed Jamie Dimon. Good morning, everybody. Let's have a look at your futures then. We've been saying all morning that we have some catching up to do with the United States. US equity markets took a turn for the worse. Despite some decent reporting from the retail sector, the focus turned to inflation later on in the session, and that hurt tech names. And as a result, we saw the Nasdaq trading to the downside during the session yesterday, certainly in the latter part of it. And we have some catch-up to play here on European equity markets this morning. So you can see those numbers just coming into view, I think, just coming into focus, perhaps. The Euro Stoxx 50 futures to the downside. Let's think about where we are then on European equity markets, just opening up or opening down by 0.3% on the FTSE 100. That is the first out of the blocks this morning. We're slightly thinner on the ground in terms of corporate reporting, but there are some individual names we're watching. Also individual sectors to keep an eye on. The auto sector is one of those. So waiting for the DAX to open over in Germany, thinking about what we might see on the German market, given the auto names and the performance, the uptick that we've seen from the auto sector in terms of new car registrations in the month of April. A really strong surge, more than 200% to the upside, but that's, of course, coming from an incredibly low base. The CAC 40 opens down by 1%. The FTSE 100 is now down by just over 1%. So these are some quite substantial losses coming through here. I do wonder how much read across we are getting from the selling that we're seeing in cryptocurrencies. That read across not fully understood, perhaps, as we were just discussing with our colleague Mark Cudmore in the last hour of the program. But with Bitcoin down by more than 9% just today, Ethereum down by nearly 14%. You wonder if there's any read across in terms of the risk taking from one sector to another, or one asset class to another. So European equity markets opening on the back foot this morning. Stocks in Asia have declined with the US, with US futures, as concern about faster inflation overshadows the economic recovery from the pandemic. Joining us now is Paul Brain, Newton Investment Management Head of Fixed Income. Paul, good morning to you. I wonder what context you would give to these drops of more than 1% on European equity markets today. Clearly, we're catching up with the US, where we seem to be gripped later in the day with concerns around inflation, but those inflation concerns are not new. Is it UK inflation data just sort of underlining the point? Is it virus concerns? I mean, what do you think is driving this selling in this morning's session?
Yeah, it's a mixed bag, as you said. I think there are a number of factors that perhaps are coming through to the market in a delayed reaction. Certainly inflation has got to be a concern because, of course, central banks eventually will react to it. I think it's too soon, perhaps, to panic about that. But you can see some of the concerns coming through from some central banks talking about perhaps tapering earlier than the market thought. We see that a little bit in the UK, of course, recently, of course, perhaps in Canada coming up soon. And I think that's the bit that worries the equity market. Essentially, of course, higher inflation getting out of control should worry the equity market. But inflation that is a temporary spike shouldn't be too much of a concern. So maybe it's just a delayed reaction to those inflation numbers that keep on cropping up. They're not going away. They still seem to be there in the background.
Yes, sorry to interrupt, Paul. In terms of inflation then and expectations of it, you suggest it could go higher, or inflation expectations could go higher, and you've been buying tips, and you've been in US inflation-linked securities, European inflation-linked securities, with a view to protecting yourself on that front. What is the strategy then around inflation at this point?
Well, it's building in the idea that we've got a temporary spike in inflation coming through for a variety of reasons. But longer term, we've got a pickup in inflation that we think is going to be a bit more sticky. So once you get past the summer spike in inflation, we drop back to a level that is higher than where we started. And that, I think, suggests that there's some inflation protection is warranted. Some markets, such as the US, are starting to perhaps price in a little bit too much. And actually, we're feeling they're a bit rich and are starting to take profits there. But other inflation markets around the world, you mentioned Europe, but also in places such as Australia, New Zealand, and Canada, still to us seem to reflect an opportunity to use some inflation protection.
In thinking about the way the market prices in that inflation, Paul, I'm looking at the US 10-year yield, 1.65%. We do seem to be edging a little higher. For context, of course, we went up to, 1.7 around that CPI number, that surprisingly strong CPI number of last week. We fell back from that, given reassurance from the Fed, and now we seem to be edging our way up there. How high do you think we go on 10-year yields, and how quickly, I suppose, is also part of that conversation?
Well, the long-term background is that for the next 2 to 3 years, we're going to have yields that are around about inflation. So in other words, you're not going to get paid too much in a real yield context from owning government bonds. Because, of course, you've got a lot of financing of debt that's been accumulated, being built up through the pandemic. So we think that's the backdrop. We do believe that inflation in the US is going to be above 2% consistently after the spike, and therefore we'd expect Treasury yields to be 2% plus, but not too far as we move towards the end of the year. I suppose the surprising thing is that if the bond market's been fairly well controlled through since the CPI number. It's not actually been, we haven't seen a big significant rise in yields. And I would put that down more to the fact the market sold off so aggressively in the first quarter, and positions have changed so dramatically that few investors are long at the moment. So I think, 2% plus is the number.
Okay, 2% plus. And I'm looking for explanations as to why we're seeing this negativity for risk assets today. We don't see a big move in the dollar. US 10-year yield is a little firmer, so 1.65% as we discussed. US stocks, of course, sold off, tech stocks in the latter part of the session yesterday. But I also keep wondering about the read across from crypto moves. They do seem to be, even if many institutional investors sit on the sidelines, certainly they have been a favorite of retail investors, and retail investors have exposure elsewhere. And so when you see something like Ethereum down 14.6% or Bitcoin down just over 9%, does it make you think about read across into other assets, or does that fallout manage to stay contained from your perspective, Paul?
Well, it's such a difficult one to read. I wouldn't say I'm an expert on cryptocurrencies, and I think there are a few people out there who are. But essentially, of course, we had a perfect storm for cryptocurrencies in that's the first quarter, with a lot of institutions buying. The technical situation was pretty attractive, and maybe we're seeing the fallout from that. It was broadening, wasn't it, a couple of weeks ago to a lot of other cryptocurrencies away from just Bitcoin. And I think perhaps that's coming to an end. Maybe there's some profit taking. Maybe there's a bit of panic building in. But yeah, the connection between the cryptocurrencies and risk assets seems to be pretty strong at the moment.
Paul, thanks very much for staying with us. Paul Brain, Newton Investment Management, Head of Fixed Income. More from him shortly. Coming up on the programme then, restrictions ease in France with the reopening of restaurants and cafes, certainly those with outside space. We'll bring you all the details next. This is Bloomberg.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
The importance of computing in all products is just going up and up and up.
Welcome back to the European Market Open. Just coming up to 10 minutes into our trading session, European equity markets down by more than 1% in all of these cases, in all of the major markets. The FTSE 100 basic material stocks certainly moving to the downside, and that's that index then down by 1.1%, but it's in good company. The DAX and the CAC both down by more than 1% as well. Let's get some of the individual stocks on the move. There are some idiosyncratic stories managing to cut through this morning. With some of the details, here's Bloomberg's Danny Berger.
Anna, yeah, definitely hard to find those stories, though. 570 plus stocks are down out of the stock 600 this morning. So the breadth is not really there to the upside at all, but InPost is moving higher. It's one of the stories standing out, reporting earnings, upgrading its guidance. Analysts saying that it was a weaker than expected first quarter, but that guidance upgrade really is helping shares today because it had performed so poorly over the past few weeks. Also, some analyst action around Commerce Bank, Citi to be specific, looking at the stock, saying that it's already fully valued. So not necessarily anything bad Commerce Bank has done, but just said, look, the upside is priced in. And it looks like equity markets agreeing. Commerce Bank almost down 2%. Finally, the miners, the material sector, all of those falling pretty heavily today as commodities also fall. Copper's down, iron ore is down, so Antofagasta down 3.3%. Now let's look at the whole macro picture here, because again, it is a lot of weakness. We're seeing the dollar just about pinned to its lowest level in a few months. It's barely moving at the moment. It's those real rates keeping the dollar down. We're actually getting a bid to gold so far this morning. This is something we haven't really seen in a while, just under $1,900. And as that is getting a bid, Bitcoin continues to sell off, still under $40,000, Anna.
Thanks very much. Thanks for the update, Danny. Danny Berger with a heads up on some of the things happening in the macro universe and indeed those individual corporate stories. Let's get to something that is quite uplifting to report, in fact, and that is over in France, where COVID restrictions are being relaxed just a little bit further today. Restaurants and cafes are reopening for outdoor service alongside non-essential shops. The night curfew is also being pushed back to 9 p.m. from 7 p.m. Joining us now is our reporter, Caroline Conan. Slowly, glimpses of normal life returning to France. Not entirely normal yet, of course, but what exactly is changing today? Good morning, Caroline.
Good morning. Not entirely normal, but even President Macron actually wants to encourage people to dine outside and have the coffees outside again. He is having a coffee himself on a terrace in Paris with the Prime Minister Jean Castex as we speak. He called the French to enjoy the moment today, but remain cautious. At the moment, the mask is still has to be worn outside, especially when you're next to people. The social distancing will have to be respected. The restaurants will only have a 50% capacity, and there will still be a 9 p.m. curfew. It is a first step, though. Non-essential shops will also reopen, which will make a lot of difference for those who haven't been able to shop for months. And cultural events will restart with museums such as the Louvre reopening today, theaters and cinemas. The next step will be in June. By the end of June in France, most restrictions will have been lifted. This will have an economic impact, of course, and also a political impact. The French economy is expected to rebound at least 5.5% this year, and President Macron is betting on the pandemic legacy and the acceleration of the vaccination campaign to go up in the polls. The latest polls have all shown that he would be neck and neck with the far right-wing leader Marine Le Pen in the second round of the presidential elections next year.
Caroline, thank you very much. Caroline Conan with details of what is changing in France today. A little bit of pre-COVID life returning, perhaps, and of course some important politics to think about around that. Let's get back to Paul Brain, Newton Investment Management Head of Fixed Income. He's still with us. And Paul, the reopening agenda across Europe does seem to be gaining a little momentum. That's the story coming out of France. Yesterday we were talking about some of the restrictions in Italy being lifted. I wonder whether this is changing your thinking about the time horizons adopted by the ECB, or is this just steady as she goes with the PEP program? No need to change it. It's a little early for that just now.
Well, I think it's important consideration because, of course, at the height of the lockdowns earlier in the year, the ECB accelerated their PP program. So the speculation is that acceleration will be pulled back at some point. It may be a little bit too soon to do that because, of course, economies are only just opening up. But I would expect to see that extra amount being taken back out again over the next, say, couple of months. And I think that's what's affecting the bond. The bond markets in Europe have been selling off in anticipation of that. They may have gone a little bit too far because essentially that program's not going to go away. It's just going to be reduced a little bit on a monthly basis. So I think QE is still there, but essentially it's not going to go away.
Yeah, that's interesting, and takes me on to some of the market moves we're seeing this morning, Paul. In the German market, German two-year yields rising to minus 0.64%. So we're still very negative. We are seeing, though, as you say, a little bit of selling in bond markets in Europe in anticipation of that ECB move, and some of those yields coming a little bit closer back towards the zero line. Are we going to be really talking about positive yields across Europe anytime soon? I mean, what kind of time horizon do we have for that? This is something that was pre-pandemic, of course, so not just, it might take more than just the pandemic to go away for that to happen.
Well, I think the combination of the pandemic perhaps going away, or the vaccine program accelerating, opening up, I think that combination with the higher inflation expectations and perhaps less QE gives you a positive yield in many places in Europe. Not excessively so, because, of course, we still have a fairly weak economic outlook to overcome, and we have a lot of debt to service as well. So I think that ECB involvement tends to distort things quite dramatically. So in the 10-year space, I'd expect to see some positive yields in Germany within the next couple of months.
And we've talked about the ECB and your expectations there, Paul. We are, of course, going to hear from the Fed a little bit later on today. Of course, we're focused on inflation, but every time the Fed is asked about inflation, there is a temptation, it seems, for them to underline the importance of unemployment data as well. And we only have to look back to the last unemployment report to see where the weakness still lies in the US economy. Complex reasons for that. What are you looking for then from the Fed minutes around that theme?
I think a continuation of the trend, and essentially they will talk about unemployment, or employment is their main goal. They keep reinforcing that. And the unemployment numbers of last week were fairly ambiguous. It was unclear as to how quickly that recovery comes through. So for the next 2 to 3 months, I think they will continue to talk about that employment problem and the fact that the recovery is not really fed through to sort that out. Now, if that starts to happen between now and, let's say, the third quarter, then I think the rhetoric, the conversation will change by the Fed, and they'll start talking about perhaps QE being tapered as we move into next year.
Paul, thanks very much. Thanks for your time. Have a good week. Paul Brain, Newton Investment Management, Head of Fixed Income. Paul will be continuing his conversation with us, in fact, on Bloomberg Radio. That is at 9 a.m. UK time. Coming up, we'll talk about the banking sector. Shake up at JP Morgan. 2 women come to the front as likely contenders for Diamond's throne following the management shuffle. But is Diamond going anywhere right now? All the details next. This is Bloomberg.
Have you ever thought of bottling your happiness? And you know, you could make a lot of money if you bottled your happiness.
Yeah, you know what it is? It's just gratefulness. I should have died in that field in Iraq.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Welcome back to the European Market Open. 21 minutes into a negative session for European equity markets, but actually substantially off lows. We were down by more than 1% at the start of the trading day, and now just paring those losses a little. Let's get to some of the top corporate news flow we're covering this morning. Here with the Bloomberg Business Flash is Laura Wright.
Thanks, Anna. Lead times for semiconductors increased to 17 weeks in April. According to recent research, the gap between ordering a chip and taking delivery is now at its longest since the firm began tracking the data in 2017. The company describes the wait time as in the danger zone. Robinhood plans to reveal its filing for going public as soon as next week. Bloomberg sources tell us the trading up is targeting late June for its market debut. The filing will give potential investors their first comprehensive look at the firm's financials. Robinhood declined to comment. UBS has started a broad round of job cuts across its largest divisions. The reductions are part of a restructuring plan intended to save the bank $1 billion over the next 3 years. Bloomberg understands they will be spread across the investment bank, wealth management unit, and Swiss business, with all levels of seniority affected. As many as 700 positions could go in Switzerland alone. That's the Bloomberg Business Flash. Anna.
Laura, thank you. Laura Wright here in London. Now, sticking with the banking sector, two women are moving ahead of the pack in the race to succeed Jamie Dimon at the helm of JP Morgan. Marianne Lake and Jennifer Piepzak are seen as strong contenders following yesterday's leadership overhaul. The bank named them co-heads of its giant consumer and community banking division. So what does the future hold in store for the bank and for these two executives? Let's talk now to Bloomberg's Asia finance reporter, Nabila Ahmed, who's in Sydney for us. Nabila, good to speak to you. Thanks for joining us here on the European Market Open. So what do we know about these two women?
So on the one hand, we've got Marianne Lake, a long-time former CFO of the bank, and also someone who's been seen as a potential successor for many years. She got a crack at running a major business line in 2019. She was put in charge of the consumer lending business at JP Morgan, which generates about a fourth of the company's revenue. She's 51 years of age, and she's been at JP Morgan for 22 years. On the other hand, you have Jennifer Piepzak, also 51, and she's been at the bank for about 27 years. She rose through the ranks of the investment bank there and succeeded Lake as the CFO a couple of years ago. So these two women are very strong contenders indeed.
So two with the CFO experience, which is also interesting. How long do we expect Jamie Dimon to hang around? Because this conversation is all suggesting that one of them will take over from him, but I don't think he said he's going anywhere just yet.
You know, that is exactly the thing that everybody's waiting to hear. What will Jamie Dimon actually do? And he has had this stock answer for a number of years when you ask him this question, and he says, well, another 5 years. And he's been saying that for a while. The difference, I guess, this time is that, you know, even though the bank does want him to stick around and the board has said that he won't be leaving for a significant amount of time, and obviously he's a rock star CEO. He has made, under his watch, JP Morgan shares have quadrupled. He's the only bank CEO still around from the credit crisis, which he navigated really well for JP Morgan. And he is the longest serving bank CEO on Wall Street. So in many ways, he is Mr. Wall Street. He is 65, though, and so perhaps some people think that this time around maybe it will really be 5 years from now.
He is Mr. Wall Street, you say, Nabila, and so this is significant on Wall Street, isn't it? I mean, give us the broader context to what we're talking about here.
Absolutely. So obviously this is one of the most prized jobs on Wall Street. You know, the head of the biggest bank in America, and filling the shoes of Jamie Dimon, who, you know, has been a bit of a rock star in banking, and everybody has turned to him for his opinion on everything, you know, banking and outside as well. And in the context of gender diversity, you know, US banks and the financial world generally has been very much trying to play catch up there. A Citigroup this year named Jane Fraser as its first female CEO. And so if one of these women did take over at JP Morgan, to have a woman leading America's biggest bank would be quite a big and bold move. But perhaps it's about time.
Thanks very much, Nabila. Good to speak to you. Thanks for bringing us the story. Bloomberg's Asia finance reporter Nabila Ahmed joining us there from Sydney. Interesting strategy in terms of finding a replacement for leadership at a bank. Also, certainly worth considering. 8:26 here in London, 9:26 in Paris or Berlin. Coming up on this programme, the UK has taken a major step towards easing lockdown restrictions this week. What does the future hold then for retail? We will speak to one of the kings of the retail industry. It's that pun again. Our interview with former Sainsbury's Chief Executive Justin King. That conversation coming up next. Really interesting to get his perspective on how supermarkets have fared. They've done pretty well, of course, when other retail had to close. How much they've invested in online, how much that's going to remain part of the story. We'll also talk to him about his ventures as well. Snappy Group is something that he has invested in, a delivery firm that helps corner shops to sell online. How much will all of these changes from the pandemic stay with us? That'll be part of the conversation. This is Bloomberg.
closures and the complexities of COVID, it became apparent that if we could provide this course in South Australia, it would benefit trainees of anaesthesia in the state.
Feel like I've got some excellent skills to take away from the course, and I'm very grateful that it could be run in Adelaide.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to the European Market Open. Half an hour into Wednesday's trading session. European equity markets moving to the downside, a little bit volatile this morning. We were down more than 1%, then paired those losses, now down by more than 1% again, as you see there, down by 1.06% on the Stock 600 this Wednesday morning. US futures also looking more negative, so NASDAQ futures down by another 1%. This after we saw quite substantial losses towards the latter part of the day for US equity markets, or at least more substantial than they'd been in the earlier part. Let's look at things from a sector perspective here in Europe then. No sectors in positive territory, all in the red. Telecoms and real estate plays a slightly more robust role, so those sort of bond proxy, less volatile, more defensive sectors playing that kind of role, losing the least today. We see basic resources and technology and travel and leisure and energy stocks moving lower. We haven't mentioned weaker energy prices today. 67.93 is where we trade on Brent, down another 1%. Progress being talked about with regards to Iran, and all of that could add up to some weaker energy prices. And so as a result, we're seeing Brent a little softer, 67.93 as I mentioned. So that's a quick look at where we are on the European equity markets. Now, the UK took a big step out of lockdown this week, with households now being allowed to mix and people able to drink and dine indoors. But how has the pandemic and subsequent lockdowns affected the future of retail? Our next guest spent many years running one of the country's largest supermarkets. Since leaving Sainsbury's in 2014, he took up a role as vice chairman of Terra Firma Private Equity and as a non-executive director at Marks & Spencer. He now has a new venture. He's joined the board of Snappy Group, a startup which aims to help corner shops to sell online. Justin King joins us this morning here on Bloomberg TV. Welcome to the program, Justin. Thanks very much for your time. I wonder how you think about how supermarkets will perform from here, because as we see life just getting gradually a little bit back to normal, are we going to see consumers move away from supermarkets that, of course, were something of a haven during those lockdown periods? Or will those new consumer behaviors be a bit sticky? We kind of got used to buying everything in one place.
Well, a bit of both, I suspect. I think in a way it's wrong to be talking about the pandemic as if it's behind us. I think we're still mid-pandemic, and so we're not going to see which behaviours stick in the longer term for a good while yet. But supermarkets over the last 18 months or so have had great top-line growth, but that's been matched with significant cost growth in terms of the changes they've had to make to cope with the pandemic. So the challenge for them, actually, as they annualise those great sales figures, is how they remove excess cost from their P&L, because they're not going to enjoy the kind of bumper top-line figures that they have in recent times.
Yes, so they had to invest, well, they had to spend on COVID infection measures, as you mentioned there, Justin. They also had to invest in online capacity. And I wonder if any of them will have over-invested there, or if you think that is going to be one bit of consumer behaviour that is sticky, that those consumers who've moved online will stay online.
Well, a good part clearly will. But remember, even at the height of the pandemic, well over 80% of our supermarket shopping was still being done in store. We're seeing a blended model for most consumers now, I think, some shopping online, doing click and collect, and also in store. And for supermarkets, for most supermarkets, of course, their model is to use their existing stores. So to some extent, it doesn't really matter what that mix is. It's just about shifting their overhead between serving customers in store and serving them in different ways too. There's a small amount of capital that they're committed to, vehicles most notably, of course, but beyond that, they haven't got, if you like, sticky capital investment that they're now wed to.
Okay, that's interesting. And in terms of the tests that supermarkets have been through lately in the UK, we've had the pandemic, all the tests around the pandemic, of course, but also the Brexit friction and the height of the pandemic, and all of that came together at around the kind of Christmas, New Year period. When supermarkets look at how resilient their supply chains have been, Justin, over that period, do you think they've learned a lot about maybe the flexibility that needs to be built in, or were they found to have coped well?
Oh, I think they did a spectacular job. I'm hugely proud of the industry that I've worked in all my working life. I think in very large part, they've dealt with huge challenges in an almost seamless way as far as the consumers are concerned. Of course, they've learned a lot along the way, because we've experienced something in the last year or so that we never expected to. But overall, I think supermarkets get an A for their performance during the pandemic so far.
Justin, do you think we'll enter a period where we'll see wage inflation in supermarkets? I'm thinking about this because there's a lot of global attention on the inflation dynamics right now, certainly in the US and in the UK. We hear from a number of corporates on the wage side, and there's been a lot of talk about those workers in the UK economy and elsewhere who were not able to work at home and who had to come to work day after day when others were given the option to stay at home. I wonder if you think that that's something that we're going to have to price in the future.
Oh, we're definitely going to see that, but I think it's been an ever-present for supermarkets. I left Sainsbury's 6 years ago now, but during my 10 years there, I don't think there was a year where wage inflation wasn't greater than retail price inflation. And so the challenge is ever-present for supermarkets, which if you're not to pass that through to consumers in pricing, you have to invest in productivity. And so you are seeing some big promises being made at the moment, particularly around iconic wage rates like £9 or £10 an hour, well ahead of the national minimum wage. And ultimately, that can only be paid for in two ways, productivity or prices. And of course, most businesses will first focus on productivity.
Justin, let me ask you about some of the new ventures that you're interested in right now. I know that Snappy Group is one of those. This is a startup that helps corner shops to sell online. Clearly, this is quite competitive. You just have to go onto one of the pre-existing delivery apps and you can see that you can get some of your everyday groceries delivered. Why do you think there's room for another player in this market?
Well, look, I think one of the messages of the pandemic is how resilient bricks and mortar has been. Even at the height, as I said, 80% of food shopping still being done in store. And the sort of silent heroes in many ways have been corner shops, our local convenience stores, and indeed local stores more generally. I'm not a naysayer of the future of the so-called high street. I think bricks and mortar has a very vibrant part of our future. But most of those models that you refer to are trying to put those corner shops out of business. And to the extent that those corner shops can use those models, they're very expensive. It's hard to see where the profit upside is for a corner shop of using a business like Deliveroo. The difference with Snappy and what excited me so much about it, why I invested in it, is that it really puts control back in the hands of the corner shop. They know their local community, they range their stores to that local community. And I think that those businesses, helped by technology, and that's what Snappy does, can really, if you like, fight back. And I think they have a very vibrant future, and their future will be multi-channel too, and that's what we're trying to help them with.
It's interesting, we saw Deliveroo list not all that long ago. It didn't go all that well, partly because of a lack of profitability and concerns around regulation and labour conditions that might come back to bite the business in the future. You seem to be to have got around that at Snappy Group by, I think, allowing the retailers to deliver, or the model involves the retailers delivering rather than somebody who's employed by Snappy Group. How do we make sure that those people within the supply chain, though, are being adequately rewarded?
Well, ultimately, we trust that the people that we serve, the corner shops, these 40,000 or so businesses up and down the country, will do the right thing by their employees and their communities. And I think those of us that use a local corner shop, and that is most of us most of the time, will know by name, actually, the people that are serving us, and very likely, therefore, the people that are knocking on the door. So I think many of those concerns of the more, if you like, remote and secondary employment models are addressed by the fact that it is so much more of a, if you like, community endeavour.
Justin, thanks so much for joining us. Justin King, Terra Firma advisor and Marks & Spencer's non-executive director. Thanks very much for joining us to talk about the future of retail. And sticking with the shopping theme, shopping at the big box stores is back in the US. Macy's, Walmart and Home Depot all reported earnings yesterday. They posted bigger than expected gains as Americans get back out to spend. It's a trend of pent-up demand that economists have dubbed revenge spending. And many around the world will be watching, given that the US is slightly ahead of Europe in this reopening trade. Danny Berger joins us then with details. Danny, good morning once again. So how exactly are Americans spending their cash?
Anna, well, we are starting to see signs that people are sort of differing in the categories they're spending money on, which of course a lot of retailers do want to see. They don't want to have to compete with that online space anymore. They want to see changes in what people are buying and that they're capturing those changes. So Macy's CEO is saying that these are encouraging signs that we're shifting to a post-pandemic lifestyle. So I picked out a few of the categories that we've seen. And one of the key ones for Macy's here is they've had these dormant categories, things that people just aren't buying or weren't buying last year that have come back to life. So one of them is work clothing. So they've seen things like dresses, heels, maybe something like the outfit I'm wearing that people probably would not be wearing if they were working from home and just on a Zoom call. There were some other kind of quirky ones that showed up in terms of demand that are very much so of this post-pandemic lifestyle, like teeth whitener at Walmart, with people in the US now able to take off their mask if they've been fully vaccinated. And I also put this one up here. I'm not sure if this counts as post-pandemic, but there's a big denim trend right now. Skinny jeans are out, loose-fitting jeans are in. So a lot of demand at Macy's for denim, and they've been able to capture that despite some of the supply chain issues. Of course, these categories helped earnings, but there is this issue for a lot of big box retailers that they did well during the pandemic. There are a lot of things that people were buying that saw their earnings be very strong last year. So when you look at Home Depot, this is for a lot of their sort of DIY categories, and they said they're still strong, especially things like gardening, bicycles, alternative modes of transportation. That was still very popular at Walmart. Again, supply issues within that as well. And things like loungewear. Macy's said that the demand for sleepwear, for sort of home attire, that hasn't gone anywhere. So it kind of shows how we're now straddling this world of, yes, things are opening up, but some of those pandemic trends have still hit these retailers.
You call it loungewear. That photo looks very much like pajamas, Danny, to me. I don't think you get away with wearing that on a Zoom call. But then thinking more seriously about this then, how long do these elevated levels of spending last? Because this is something that's not just causing economists in the US and retailers in the US to scratch their heads, but globally, where we have been lucky enough to see picks up in savings, economists are trying to work out, how much of that is going to be spent and how much not.
Exactly. Well, I mean, look, the levels of savings are getting put to work, certainly. I mean, they reach pretty high levels. But when you think about what people are spending on, some of them are big ticket items. Maybe we're not here yet in Europe, but in the US, you get people spending on travel, for example. Now, in terms of this stimulus spending, Stifel did a survey, and 57% of Americans they surveyed said that they had already spent their stimulus checks. That compares to around 35% in March. So a lot of people are already more than halfway done spending their stimulus. So if we're trying to sort of divine where Europe is going to be in comparison to the US, you can see that this spending can go pretty quickly, again, if it's things like traveling, cars, these bigger ticket items that people have been waiting to buy because they have spending saved up. So we might see a slower burn of cash, but it could, again, dissipate as we get towards the end of the year, assuming things come back to normal, Anna.
Yeah, if it's a new car you're after, then we might have to think about the supply of those as well, given what we've said about chips in recent months. Danny, thanks very much. Danny Berger, with a look at the reopening narrative coming through from US retailers. Coming up on this program, an historic turn after pouring trillions into oil, gas and coal. Banks are now committing more financing to climate-friendly projects. More on that story next in our Big Take. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may
be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between government and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
We have tremendous opportunities for deployment of already existing technology that can help us get that reduction that we so desperately need to show the world that we are back in action in the United States. We're going to provide international leadership. But there is no doubt that the challenge of climate change is big, and fixing it is going to take investments.
That was White House National Climate Advisor Gina McCarthy there on the Biden administration's plans to tackle greenhouse gas emissions, talking about the importance of technological improvements. Let's stick with the latest on the efforts to combat climate change. And after pouring trillions into oil, gas and coal since the Paris Climate Agreement in 2015, banks are now committing more financing to climate-friendly projects. Green bonds and loans from the banking sector have exceeded the value of fossil financing so far this year in an historic milestone. Alistair Marsh joins us now. He covers green finance and ESG for Bloomberg. So, Alistair, how significant is this milestone? Banks now financing more green projects than banking, than the more polluting stuff.
Hi, good morning. Yeah, this is a significant milestone. It's certainly worth noting, especially given the history that you've just laid out, that since the Paris Accord was struck, banks have poured trillions of dollars into the fossil fuel sector. So to have a slight rebalancing this year is clearly something that climate activists will be pleased about, and comes at a time when banks are under greater pressure to sort of show their green credentials and commit to reducing emissions across the business. However, it's worth noting the scale here before we get too excited. We're talking about $203 billion of loans and bonds, green loans and bonds this year, plus about $190 billion of fossil fuel. So just a couple of big deals could already tip the scales. And really, when I talk about the scale here, we should be comparing, the small amount this year of green versus the enormous amount of funding that's been provided consistently over the last 5 years or so to the fossil fuel sector. So before anyone gets too excited, I guess the historical context is most important, and then just seeing, can this be a moment where banks find the energy and resolve, and I guess they can make the business case to transition their business towards green and make green more of a sort of staple of what they do, rather than just a small niche in the corner.
Yeah, it is interesting that chart on our screens at the moment, Alistair, tells that broader, longer-term point about the amount of money that's been poured into the fossil fuel industry versus green projects. It is changing, but right. Your point is well taken. What is the role then of banks in the climate change agenda? I suppose we hear increasingly from banks about the way that they're approaching this. What's your view?
Well, banks are essentially what you might call, and what has been called, the money pipeline for fossil fuels, in that they're great their great contribution to climate change comes not through their buildings, although of course there's emissions related to their property, but it's actually through their loan book, through what they finance. That's where they make a contribution to climate change. And so it's important and notable that you have most of the big banks, including on the, those who are top of the underwriting this fossil fuel financing, all of those banks, JP Morgan, Citigroup, et cetera, Barclays and HSBC in Europe have committed to net zero. They've made a commitment around that, which suggests that they will play an active role in, retooling their loan book and the way they finance things to support the transition to green. But there are quite a few question marks about, in some ways, their commitment to that or the pace at which they're going, because actually the science, the climate science around net zero suggests that we reach net zero by 2050 only if we cut net emissions in half by 2030. So that's only 9 years away. So that would mean that sort of baby steps and kind of nice public speeches about how we care about climate change is not enough, that banks and businesses and the economy in general, if we're going to reach net zero, have to do a lot of things, take drastic action kind of right now, basically. So this is a welcome sign, I guess, but let's see how we go from here.
Absolutely. One to keep under review, Alistair. We'll keep our eyes firmly trained on that pipeline of cash and where it goes. Alistair Marsh, Bloomberg's ESG reporter. Coming up on this programme, all eyes will be firmly fixed on the Fed later on today as we eagerly await April's minutes. And any discussion of surging US inflation, we'll discuss that next with Laura Cooper from the Markets Live team. This is Bloomberg.
Clear, concise conversation on Bloomberg Surveillance.
There's no vowels in a digital future.
Come on, John, I just think it works.
It works. For inverters.
We're beating this to death. Watch weekday mornings on Bloomberg Television.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Welcome back to the European Market Open. It is Wednesday morning, 54 minutes into our trading session, down by just over 1% on the European stocks broadly. The DAX getting the worst of the losses, it seems. Let's think about why this is happening. Laura Cooper, Bloomberg's Markets Live macro strategist, joins us. Laura, good morning. In terms of the sector picture, it looks like a sort of reverse of yesterday. If you turn the sector picture, I suppose, on its head, you get yesterday's story. I mean, what's happening for European equity markets? What do you think is in the driving seat, other than US futures, which do seem to be deteriorating?
Well, I do think, it's really around those inflation fears are kind of being pinned to the negative price action that we're seeing today. But I think really context is key. The fact that European equities are still flirting around those record high levels. And if we look at the current backdrop, we are still in a pro-cyclical inflationary environment. We are seeing those steepening yield curves. And as we get growing conviction on that strong European recovery, I do expect we're going to see the next leg in European equities. Just looking at the rate of vaccine rollouts currently, Europe has now caught up. And essentially, we're seeing the continent now on pace to reach herd immunity at the same time as the US. So that's quite a significant move, and I do think investors are going to reflect that.
Yeah, that is incredible, and something that you might have thought would drive further risk appetite, but of course, equities being a discounting mechanism, maybe that's all in the price. On the inflation side, we got that UK inflation data. I saw a piece of research from Berenberg says that, this is the turning point is here, don't ignore it. What was your takeaway from the UK inflation data?
Well, the headline gauge did come in as expected. There were some surprises in terms of stronger producer prices. We did see that retail price index come in higher, but I think it really is just fueling this transitory debate. We had a trio of Bank of England members come out yesterday saying that they do still see these price pressures as temporary, but there are these building signs that they could see these supply constraints, these potential wage pressures as being longer lasting. And that's really the risk, is that central banks get behind the curve. So I do think investors are focusing clearly on the FOMC today. If we do see any hints of any kind of hesitation around that temporary narrative, I would expect that that's really the key thing to watch for.
Yeah, that would be where there would be news, if there were to be any, in the Fed minutes, wouldn't it, Laura? That would be different to what we've heard so far. Laura Cooper from the Markets Live team, thank you so much for joining us here on the European Market Open. That is it for our program. Surveillance Early Edition is up next. It is 8:56 here in Europe. European equity markets to the downside, as are US futures. The markets continue to be in focus for us here on Bloomberg TV. This is Bloomberg.
Lumber prices across the U.S. are skyrocketing. A 60% surge this year sent prices to a record. And analysts, they aren't expecting any relief until late 2021.
If you can get your hands on it, you're going to buy it, no matter what the number is. And the numbers are getting higher and higher.
Tightness is acute across the entire timber supply chain. Sawmills have had trouble ramping up fast enough to meet demand, while trucking delays and worker shortages at lumber yards have added to the cost. The summer peak of U.S. home building is expected to deepen these supply constraints and keep home prices red hot.
What's happening is lumber's going up, insulation's going up, stucco's going up, concrete's going up, and that's getting passed on to the consumer.
According to the National Association of Home Builders, wood costs have already added more than $24,000 to the price of the average new house. lumber prices are expected to stay elevated for months to come.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Jobs plan, taken as a package, will enhance the net profitability of our corporations.
The vaccination is taking hold, and you're definitely seeing a change in the customer behavior.
Do we think that it is most likely that inflation could go above target a bit temporarily later this year?
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. It's a down day for stocks as market attention shifts to the Fed and whether higher inflation is here to stay. Bitcoin gives up its Tesla-fueled gains as China reiterates its warning on the crypto space. And UBS slashes jobs across its biggest divisions as the chief executive, Ralph Hammers, ramps up the restructuring. So, good morning. Happy Wednesday. We have quite a lot of news out there. We're also getting the European Central Bank saying that the euro area faces elevated and unevenly distributed risks to financial stability. This is the Financial Stability Review. It's just coming out right now. Also saying that there's remarkable exuberance in the markets. Now, these are warnings that we've heard before, but again, still quite striking when we get it from a big central bank. It warns of spillovers from a U.S. equity correction, saying that they could be also substantial. On crypto, the ECB saying that its risks are limited for now. We'll see whether it has any market impact, but certainly always good to hear and heed the warnings from central banks. Now let's get to one of our top market stories. Bitcoin slumping as much as 11% this morning. Now, China reiterated that it cannot be used as a form of payment. Our Danny Berger joins us to discuss the latest. Danny, if you look at Bitcoin, I mean, it's never, ever dull. And basically, the sell-off was accelerated by what the PBOC has said, but they've said this in the past.
Yeah, they have said in the past. And I should just say it is an interesting contrast with those lines from the ECB. I mean, China isn't necessarily warning of any instability here, but the ECB is saying that there's no instability risk. But yeah, they say, you know, it's not a real currency and should not and cannot be used in the market as money. And so when these lines were first published and throughout the next couple hours of trading, we see these very, very steep declines from Bitcoin. Now it has backed off somewhat. We did breach a key level, which is the 200-day moving average in Bitcoin when it fell below $40,000. Now it has just gone be up that amount, so now it's back above its 200-day moving average. And I just bring up this technical analysis because people care a lot when it comes to cryptocurrencies for these momentum indicators, because you can't really trade Bitcoin off of fundamentals. There's no government, there's no earnings, there's nothing like that. So these types of momentum indicators become really important. So the thought among analysts had been, okay, if it dips below 200-day moving average, you get below 40,000, and then that's when losses continue to accelerate. Now, again, they're starting to ease off now, whether that be because of the ECB comments or what have you. But again, we're going to have to keep watching this 200-day moving average to really see the future direction of Bitcoin.
Danny, we heard from Bank of America, Merrill Lynch, the most recent fund manager survey there also had Bitcoin as their most crowded long.
Yeah, they definitely did. It's not the first time, Francine. And often people use this survey to say, okay, these are sort of your contrarian trades. If everybody's long tech, maybe you should be short tech right now. So they say Bitcoin, but I think this time around when you're talking about a cryptocurrency, this isn't necessarily a contrarian trade. Joe Weisenthal pointed this out as well yesterday, that long Bitcoin has topped topped the list before. It topped the list in January, and Bitcoin went on to have this gigantic run. So oftentimes it's kind of good for Bitcoin to have a lot of sentiment momentum behind it, again, because it's not something we can trade off fundamentals.
Danny, thanks so much. Our Danny Berger there with the very latest on some of the moves in crypto. Now let's bring in Bloomberg's Joanna Ossinger for more. Joanna, who of course watches everything crypto, or CryptoStar over in Asia. Joanna, if you look at Bitcoin today, I mean, are there any key levels that you would be watching out for?
Well, in addition to the 200-day moving average that Danny pointed out, you do have just the 40,000 level straight, but then you even have 30,000, which some people are talking about now, and that seems crazy, but it is still a volatile asset class. And even though volatility has been declining as crypto matures generally, you got to watch for 30,000. But then there are some people saying that it could hit all-time highs by the end of the year. So there are still people who are talking about, say, 65,000, 75,000 by the end of the year. And obviously that wouldn't be too soon, but really this space right around 39,000, 40,000 is key as to where it's going to go moving forward.
Joanna, Bitcoin has lost, of course, almost all of its gains since Tesla announced its investment early February. Can you actually walk us through what's happened in that time? You've been following it very closely, and it seems that it almost moves on the back of news that's at some, at certain instances not news.
Right. Well, it did take a huge jump from about 39,000 to 44,000 when Tesla disclosed that it had bought $1.5 billion of Bitcoin. And of course, moved up from there, a lot of enthusiasm about whether other corporations would get involved, enthusiasm about Elon Musk being so gung-ho about it, and whether that would bring more maturity to the asset class. So Musk has really helped drive this. And now it has gone back to that level, basically. So you went from 39,000 to almost 65,000. And there are other things in the middle of it, but there's a lot to say for this kind of having been a Musk rally in a way. And now it's back down to that level. And of course, it's still up in the past year. I mean, this is not something where if you've been in for a year, you're down now. It's had tremendous gains. But it does, if you bought at that 65,000 level, you wouldn't be too happy right now.
Joanna, what's the relationship right now between China, the Chinese central bank, and cryptos in general? I know there was also, this Chinese yuan or virtual yuan that we were talking about, which didn't excite the minds of people as much as they thought they would.
Right. So the digital yuan is in test mode, and it's pretty well along the way to operating. They've done real world tests with it and everything, and there are a lot of people saying that it actually could exist alongside cryptocurrencies, that China might not worry too much about having something like Bitcoin if the digital yuan is able to deal with some of the things that they would like it to. But at the same time, this statement, and it was something on the PBOC website, or the WeChat that was from industry groups. So it wasn't the PBOC saying it per se, but it dovetails with what's been said since 2017 with the cautions about crypto. It's a reminder that China is looking at this stuff. They don't want too much speculation. And so they're keeping an eye, and since China is such a key part from mining and everything in the crypto ecosystem, it has gotten people nervous again.
Joanna, thanks so much, as always, for all of your insight. Joanna Ossinger there joining us today. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Russia is dialing back reports of a major breakthrough on the nuclear deal with Iran. A senior diplomat says that while significant progress has been made, unresolved issues still remain. He was earlier quoted by the BBC as saying an important announcement could be made today, but later said more time was needed to finalize the agreement. Fighting between Israel and Hamas is continuing. The death toll is now at least 217 people in the Gaza Strip and 12 in Israel. Diplomatic efforts to stop the conflict are also intensifying. Israel's Channel 12 reports that Hamas has agreed to an Egyptian proposal for a ceasefire that would start on Thursday morning, but there's been no response yet from Israel. Today, France is easing more of its lockdown restrictions. One of the most anticipated measures is the opening of terraces for cafes and restaurants. Non-essential shops will also be allowed a limited number of customers. France's vaccinations are picking up, and it's now given around 30 million shots. The world's top vaccine maker says it sees export delays until the end of next year. The Serum Institute of India says it's struggling to supply its home country, currently overwhelmed by the pandemic. It hopes to start delivering vaccines to poorer nations through the COVAX scheme by the end of the year. It's a major setback for the nations who were relying on those jabs. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. The mind wanders. I could see us actually having a coffee on the Parisian terrace as it reopens today. Our Leanne Gerrans. Now, crypto is not real currency. The statement by China's PBOC was enough to send Bitcoin below $40,000. We discuss the digital token next with Jeff Yu of BNY Mellon. And if you want to join our conversation, please do so. IB plus TV Go. This is Bloomberg.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the European Central Bank says the euro area faces elevated and unevenly distributed risks to financial stability. In its financial stability review, the ECB says there's a remarkable exuberance in markets. Now, it also warns of spillovers from a U.S. equity correction, saying that they could be substantial. On crypto, the ECB says that its risks are limited for now. Now, let's get straight on crypto, saying, well, the PBOC saying it's not a real currency. That was a statement by the Chinese central bank. The PBOC has warned against the speculative use of what they call virtual currencies. This comes as China's own digital yuan fails to impress early users at a trial in Shenzhen. Well, the PBOC's words were enough to send Bitcoin below $40,000. The digital token has erased all gains since February the 8th, the day that Elon Musk announced that Tesla would use corporate cash to buy the digital asset and accept it as a form of payment for its vehicle, something he's since reversed. Joining us now to talk everything markets is Jeffrey Yu, BNY Mellon Senior Strategist for EMEA Markets. Jeff, I need to start with Bitcoin because it's unclear exactly what the market saw in the PBOC comments that made them really sell off.
Well, to be honest, the fact that markets were pinning on China to allow Bitcoin to proliferate is just incredulous, right? So there are many reasons perhaps to buy Bitcoin, but hinging on China to allow Bitcoin up ahead, I mean, come on, right? So the PBOC, really, they started DCEP, their own version of the digital renminbi, to counter Bitcoin. They've been waging war against cryptocurrencies, ICOs, for several years now. So to actually now suddenly realize, oh, China might not allow this, to be frank, it feels like a bit more of an excuse to get out for whatever other reason.
Right, and this was a little bit like when we saw that tweet by Elon Musk saying, oh, guys, it's not green. You know, many people knew it for a long time. So what exactly, what does Bitcoin become? Does it become, you know, just the predecessor of something that's more green and more stable? Or is cryptocurrency and, you know, these cryptocurrencies in general just going to be very, very volatile and unpredictable?
Sure, but there are two things here. Firstly, Bitcoin is what it isn't. And what I mean there is Bitcoin is not fiat currency controlled by central banks. You know, that was one of the foundational principles, and that will always be there. And to much of the market, and we're listening to clients espouse this view as well. If you want an alternative store of value, a medium of exchange, which is independent of what we use conventionally, then fair enough, right? But that it is what it isn't, if you know what I mean. And the other fact of it is it's going to be highly susceptible to swings in monetary policy. So the other thing to bear in mind is the direction of US real rates, or whatever you think of the pace, is probably higher at this point, and that will affect quote unquote alternatives across the board. So it's really going to react to these two factors.
Yeah, so let's talk a little bit about FOMC and actually the minutes a little bit later on, Jeffrey. This is, you know, the big thing that we'll actually see, and this will give us an indication first of inflation and exactly what we should be looking for from the minutes later to see whether they're still with the stance of wait and see. Is there anything that would make you change your mind, or that you think would make the Fed's mind change?
So to be honest, for the time being, perhaps not, because we've had some strong inflation prints already. We saw the CPI numbers and the PPI numbers. And there have been some other prints, such as non-farm payrolls, which are on the other side of the equation. I guess the only thing we want to see at this point is the variation in opinion. So how much internal debate was there within the FOMC? So fine, they're not ready to advance with their policy anytime in the near future, but the more they're talking about it, that in itself is enough to inject volatility into the debate, and I think it's something the market should be wary about. But I think on balance, they're just going to take it as easy as possible at this point and just allow the data to play itself out.
Could we be importing, and this is, you know, the oldest question in the book, could we be importing inflation from China, or is that far-fetched at this point?
I'm actually inclined to take the other side of that view because, you know, one chart I track quite religiously is basically iron ore prices. So iron ore so far seems to be ignoring everything that China's throwing at its property market, right? So, but already, if you listen to China's language, it is actually very conservative on growth at this point. So if China is going to actually slow a bit, and Beijing is saying this outright, and demand is not going to be as strong, then the conventional drivers shift. So China actually might not exactly be exporting disinflation, but certainly it's not going to be a source of inflation that we counted on in the past. And particularly in commodity markets, are they peaking around these levels? I think how China grows in the next 6 months, that's going to be a big part of the story.
Jeffrey, how do you view commodities in general? So we're not in the super cycle, although sometimes it feels like it.
Well, again, two aspects there similar to what we mentioned about Bitcoin. So the first is, of course, growth. Where do you see commodities up ahead in the context of global growth? We have the recovery this year, stronger PPI numbers, CPI numbers, input costs, and also the supply issues. That is the short term. But over the medium to longer term, what is the direction of US real rates? If US real rates are only going to go higher over, let's say, a 1 to 3 year horizon, then that's going to be a much more challenging outlook and for commodity prices, especially if you consider what China's growth trajectory is doing.
Jeffrey, what do you make of what we heard from the ECB? I mean, they're warning about, possible financial stability because of some of correction in the markets or some asset price movements. Is this going to be in the next couple of quarters, or is it something that we start worrying about in the next 6-7 months and beyond?
I think it's the next 6-7 months and beyond. But the bigger question is, what do you do about it, right? So every single central bank, so almost every single central bank, if you go through their statements, you see this in Scandinavia, you see this in Australia and in New Zealand. They're worrying about financial stability, house prices, and the SMB, for example, that's often mentioned in the context of Switzerland. But again, what do you do about it? And the only central bank that is doing something about it or has something imposed upon it is the RBNZ, a house price mandate, right? So that's one thing I'm interested in. Is this going to become a political issue like house prices in the UK? And then conversely, we're going to see governments tell central banks, you need to help deal with this as well. And in the end, if they can't do macroprudential measures, like in Sweden, there's only one blunt force instrument left, which is rate hikes. And there we're going to go into very dangerous territory. So expect this to be talked about a lot. But again, only one central bank is doing something about it right now, which is in New Zealand. I don't see any other central bank doing anything anytime soon, to be honest. They really want to steer away from this.
What should investors or market participants do about it?
Well, they have to anticipate whether there's going to be regulation. So again, if we look at the UK, 2 or 3 things which actually did dampen the housing market over the last 10 years or so. One, of course, is the interest rate cycle. But secondly, the tax changes under Chancellor Osborne, right? So which really affected investment demand in the buy-to-let market. And that was a major drag for quite some time. So now we're seeing supply constraints and demand pick up. But over the medium, longer term, I think that investors, not just in real estate, but financial markets in general, be it crypto or other alternatives, you need to look at regulation, because regulation is where, and central banks would prefer that the regulatory bodies deal with this. They start to tamp down on trading activity, maybe taxation, and a combination of issues. So one, it can help redistribute, so gain tax from it and help pay for other public services. But on the other hand, if they're genuinely worried about financial stability risks, then it needs a comprehensive effort between regulators, governments, and also central banks. So this will come over time. It's going to be a long-term theme, as you say.
Great, Jeffrey, thanks so much. Jeffrey Uther of Bank of New York at Mellon stays with us. And coming up, Andrew Bailey says that the UK should prepare for a temporary surge in inflation. Up next, we continue our conversation with Jeffrey Yu of BNY Mellon. If you want to take part in the conversation, just IB us. You can IB me directly or go onto IB Plus TV Go. This is Bloomberg.
never sleep. So stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance Early Edition. Weekday mornings on Bloomberg Television.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Do we think that it is most likely that inflation, which we put into the report 10 days ago, we think could go above target a bit temporarily later this year for these base effects? Do we think it'll come back towards target or not? Now, our judgment at the moment is that it will.
Well, that was Andrew Bailey, Bank of England governor, giving his outlook on inflation before the House of Lords Economic Affairs Committee. Let's get back to Jeffrey Yu of Bank of New York Mellon. Jeff, when you look at what we heard from the Bank of England, we also heard from someone from the MPC saying that actually now they have negative rates, or they'll have negative rates in their toolbox from August. What's the path forward from the Bank of England?
Well, the path forward, I think, is only risks to the upside, upward revisions to their forecasts. I mean, it may be tweaking the APF and the pace of it, for example. So that was already flagged in the last decision as well. And we saw the RPI numbers are released earlier today. So clearly demand is picking up. But on the flip side, as the BOE also highlighted, it's about wages at the end. And it's not just the BOE or G10 central banks. You know, they want to see wages return on a sustained basis. And that's the one thing the BOE really just doesn't have confidence in right now.
Jeffrey, very quickly, what's your level on pound from here end?
So still like cable just marginally higher at this point. I think we can shift towards a broader, maybe 143, 145 kind of a range. And as a clearer exit is signaled, of course, the dollar will be part of the story as well. Sterling right now sort of neutrally held in terms of the markets. But as demand really starts to recover, that's where the positivity comes from.
Jeffrey, thank you so much. Jeffrey Yu there, BNY Mellon Senior Strategist for EMEA Markets. Now, coming up, we look at banking. UBS slashing jobs across its business in its latest drive to cut costs. This is Bloomberg.
think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
It's a down day for stocks as market attention shifts to the Fed and whether higher inflation is here to stay. Bitcoin gives up its Tesla-fueled gains as China reiterates its warning on the crypto space. And UBS slashes jobs across its biggest divisions as Chief Executive Ralph Hammers ramps up the restructuring. Well, good morning, everyone, and welcome to Bloomberg Surveillance, the early edition. I'm Francine Lacqua here in London. Now, UBS slashing its headcount as a Swiss bank attempts to save $1 billion over the next 3 years. The Chief Executive, Ralph Hammers, is looking to cut costs during his first year on the job, rolling out a digital strategy across the business. Now, most of the cuts are expected to fall in Switzerland, where as many as 700 positions are expected to be axed. Joining us now is Patrick Winters, Bloomberg's finance reporter in Zurich. Good morning, Patrick. So what parts of UBS are these cuts actually going to be focused on?
Good morning. Well, the immediate cuts are happening in wealth management and in the investment bank. But over 3 years, about 700 positions are going to be gone in Switzerland alone. And these job cuts are a first wave, but more reductions are expected over the next 3 years as the bank rolls out its digital strategy. And I think this is, probably one of the first signs that Ralph Hammers, UBS's CEO, is revealing about his new strategy. And until now, it's mostly been broad brush comments about digitalization and becoming more agile, but these, I think, are the first signs of what's to come seeping through.
So how does this play, Patrick, into the strategic plan for the new chief executive?
I think it's a very tough one. Ralph Hammers has to see where he wants to cut costs and which strata of the cost structure he decides to go for. UBS has actually been net adding jobs in recent years, but obviously it's a company in a high-paying industry, banking in a high-cost country, Switzerland, and there are literally hundreds of employees on six-figure salaries at UBS, and the high costs have been the subject of analyst gripes over the years. So it'll be interesting to see exactly which parts of the business Hammers decides to pull back on. Also, what type of employee? Is it cutting junior employees, ADs, directors or lower, or even going for the MDs and GMDs, the global managing directors? And UBS, it's a quirk of the Swiss bank. They even have a rank above managing director for about 100 employees called the global managing director. And I think these guys even have a private gym in Zurich, just to give you a sense of the cost. So it's a question of what will Hammers tackle first and how much resistance will he face as he tries to implement his strategy.
Patrick, when you look at, so this is cost-cutting exercise, which a lot of the banks need. How do they grow from here? So where do they want to focus on? And again, how will the strategy change compared to the previous chief executive?
One of the issues here for Hammers is that UBS is an oil tanker, but its strategy has been working. And Emotti, the predecessor of Hammers, set up a strategy based around wealth management, and that basically works. And the last couple of quarters have shown that asset prices have been rising. That means UBS manages more assets for wealthy people, and they're making very decent profits. So while you can take out costs, you don't want to ruin the main business of the bank, which is working well. And then in terms of investment banking, they also don't want to miss out on some of the market-based volatility, which has been driving revenues at competitors in Europe and also in the US.
Patrick, thanks so much. Patrick Winters there, Bloomberg's finance reporter in Zurich, covering the Swiss banks. Now, sticking with banking in the U.S., two women are moving ahead in the race to succeed Jamie Dimon at the helm of J.P. Morgan. Marian Lake and Jennifer Pibsack are seen as strong contenders following yesterday's leadership overhaul. Now, the bank named them co-heads of its giant consumer and community banking division. Joining us now is Bloomberg Opinion's finance columnist, Elisa Martinuzzi. Elisa, first of all, congratulations on a wonderful column that came out, which I really enjoyed reading. I urge everyone to go out on the terminal or also on our website and read Elisa's column. We have two women now at the top of the succession race at JP Morgan. What do we actually know about them?
Well, I think what's interesting is that this time it does feel that, the clock is now ticking on this race. Jamie Dimon, famously deflects, the question of when he might step down, typically by saying, he's going to stay there at least another 5 years. But I think having set up these two very likely candidates, in the race, the way he's done by placing them at the helm of the very big unit, as you say, does indicate that maybe that succession race is now actually happening. Now, what we know is that, they've both been with the bank, many years. Potentially, one of them, Marianne Lake, a little bit more established than Jennifer Piepszak, Marianne having been the CFO for 7 years before Jennifer Piepszak took over that position, has established herself, very credibly within the financial community. Jennifer Piepszak only in that role for 2 years, maybe less so, and now both as co-heads of the consumer and community banking unit means that they'll both get a shot at this potential top job.
Yeah, Daniel Pinto also, of course, now, sole president of the bank. Does it just show, given the moves that we saw, that Jamie Dimon is really now, actively looking for a successor?
I think so. I think, Daniel Pinto is seen more as the person who would take over, if something were to happen now, sort of in the immediate term, to Jamie Dimon. He, of course, stepped in alongside his other co-president at the time, Gordon Smith, to run JP Morgan last year for a little while when Jamie Dimon was off on sick leave. And so he's obviously shown that he can do that, and he did that at one of the most stressful times in financial services, of course, as the pandemic hit. But I think, he's clearly established now, potentially a 3 or a 4-pronged race with the new CFO also potentially, being able to establish himself, within, a few years as a potential successor.
Overall, Elisa, I know you've been working a lot on columns, looking at the future of the workplace and banking, about hot desking. How do you think that the pandemic will change and shift the way that bankers do their job?
I think that's still an unresolved question. I think, there's those who are, expecting there to be a lot more flexibility, particularly some of the European banks, with a lot more remote work. The U.S. banks tend to, giving the message that they're expecting most people to come back after the pandemic eases. I think there will be a lot of trial and error. There's obviously going to be an adjustment, and it's difficult to tell how easy it's going to be to run a very large organization if many people are working remotely many days of the week. But I think the message that perhaps hours have become far too long for too many people and the overwork. I think that's certainly a message that is being picked up by financial services, and be it introducing sabbaticals or more flexible work. I think we'll see a lot more sensitivity to that.
Lisa, the other big story in banking, and there are many big stories in banking today, but you and I have been following, of course, what happened between Andrea Orcel and Santander, now Mr. Orcel being the UniCredit Chief Executive Officer. Today, we understand that they're both in court, a procedure, and him, basically saying that he did have a contract and he's owed quite a lot of money by the Santander chair. How do you think that will pan out? Is it too early to say? Could it be damaging, actually, for his reputation and UniCredit?
It is obviously a very awkward situation to be in. He's been in the job just a few weeks at UniCredit, and to be in court, with a claim against an employer with whom you've had a really quite brutal, discussion with, is quite unusual. I think it's early to tell. Obviously, some of these, might get resolved out of court. There's a hearing, as I understand, today, but up until the judge's judgment, which could be months away, there is an opportunity for an agreement out of court. So I think it's one to watch.
Thank you so much. As always, our Bloomberg Opinion finance columnist, Elisa Martinuzzi, for all of her wisdom and insight. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Russia is dialing back reports of a major breakthrough on the nuclear deal with Iran. A senior diplomat says that while significant progress has been made, unresolved issues still remain. He was earlier quoted by the BBC as saying an important announcement could be made today, but later said more time was needed to finalize the agreement. Fighting between Israel and Hamas is continuing. The death toll is now at least 217 people in the Gaza Strip and 12 in Israel. Diplomatic efforts to stop the conflict are also intensifying. Israel's Channel 12 reports that Hamas has agreed to an Egyptian proposal for a ceasefire that would start on Thursday morning, but there's been no response yet from Israel. President Biden is planning a 2-week delay for a ban on new investments in certain Chinese companies. Sources tell Bloomberg that officials are drafting guidance to clarify the Trump-era policy that confused Wall Street. The main question mark is over how the China investment ban applies to subsidiaries. Here in the UK, Prime Minister Boris Johnson is fleshing out his plans to level up the UK. He wants to spend £830 million on transforming local town centres. He also plans to shift 3,000 civil service jobs out of London by 2025, including to Edinburgh and Belfast. Johnson says he wants to seize the opportunity to build back better from the pandemic. And finally, today, France is easing more of its lockdown restrictions. One of the most anticipated measures is the reopening of terraces for cafes and restaurants. Non-essential shops will also be allowing a limited number of customers. France's vaccinations are also picking up, and it's now given around 30 million shots. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, crypto is not real currency. The statement by China's PBOC was enough to send Bitcoin below $40,000. In the past few minutes, the ECB says it risks to financial stability are limited for now. Up next, we discuss crypto with our Danny Berger. This is Bloomberg.
It's such an interesting new world. The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
The importance of computing in all products is just going up and up and up.
the president is concerned that China is far ahead of us in the electric vehicle market, and instead of producing the technologies of the future, we're importing them from somewhere else. It is time for that to shift around. So the president has an American jobs plan where he's looking to invest more than $170 billion, and he's going to build out the electric charging stations that we need for consumers to buy these vehicles and feel confident that they can get where they want to go and back again. He's looking at actually providing consumer rebates at the point of sale. He's looking for low-interest loans, grants, and other opportunities to work with battery manufacturing so that we steal that supply chain back to the United States again instead of ceding it to other countries. And he's looking at opportunities to continue to advance, not just in the electric vehicle sector, but in other sectors, to show that the United States, following this pandemic, we are going to not ask for sacrifice for our people. We're going to design a plan that gets our people right in the mix of the best union jobs that they can have. And we're going to grow those jobs, and we're going to grab the manufacturing sector back again right here in the United States.
The president's plan calls for $700 billion in infrastructure improvements, including the electric car charging structure, which you mentioned.
Yep.
But there is no legislation at this point moving through Congress to get the necessary funding and regulations for this plan. What is the administration doing about that?
Well, there are actually a number of pieces of legislation that looks to support parts of the American Jobs Plan. But the president really wanted to put together this $2 trillion plan to show that we are actually going to be back on track to capture the future again. He wants an investment that's right-sized for this moment, a once-in-a-generation investment, and that's what this represents. It's not only just looking at electric charging stations, it's looking at making the transmission grid system work so renewable energy is available all across the United States. It's investment in our water and our wastewater infrastructure. It's going to repair roads and bridges. It's going to look at the kind of investments in America that you expect a president to make who cares about people and knows that it's not about sacrifice, it's about hope and opportunity that this moment brings. And he's going to capture it. So you're absolutely right. There's numbers of pieces of legislation over there that have not passed, but he's sitting even today. We have folks sitting together, Democrats and Republicans, looking at what we can put together in a bipartisan way to move this plan forward. But this president has made it very clear that this plan needs to be bold, it needs to be big, and it needs to meet this moment in time.
But if Republicans were a bit sort of not that excited about the jobs plan, the reaction was a bit muted. At what point then does the president move forward with Democrats in the majority with his plan?
Well, the point is not now. The point right now is to work with Republicans as best we can, and then the president will make a decision on what to do next. But I think we all know that President Biden has been in office for a long time, working across the aisle. He's hoping to do that once again, but he's not going to wait forever.
Well, that was the White House National Climate Advisor Gina McCarthy speaking exclusively to Bloomberg's Emily Chang about President Biden's climate agenda. Now let's get to one of our top market stories. Again, Bitcoin slumping as much as 11% this morning. China reiterating that it cannot be used as a form of payment. Our Danny Berger joins us to discuss all of this. Danny, the warning from China seemed to kick off steeper losses, but it's actually no surprise that they once again said this.
Yeah, exactly. This isn't really new information coming out from China. Maybe it is just sort of a reminder to the market that China is watching this. They are on top of this when they issue this via WeChat. So you do see steep losses. I have to say that $40,000 level one is one that's very closely watched when it comes to Bitcoin. You know, it's this kind of sentimentally traded cryptocurrency. And so that threshold there is one we've been flirting with. It did drop below it bit earlier this morning. Now we're back up above $40,000. So I think this is going to be a really interesting one to watch if throughout the day it can keep above this level. Now, not only is it keeping above $40,000, it's also keeping above the 200-day moving average, which is this purple line here. Again, this is another momentum signal. If bearish momentum really builds to the downside, that's something that can get a lot worse from here. One interesting thing, though, about this level is around back here in February is when we get the announcement from Elon Musk that they'll take Bitcoin as payment for Tesla, and now we're back at that level before that even happened. But you know, we have China, you have Elon Musk dictating Bitcoin, but besides that, it really is these momentum signals that are so important for the cryptocurrency because there are no fundamentals to really trade on.
Yeah, Danny, another thing that you brought to our attention is Bank of America's most recent fund manager survey also had Bitcoin as their most crowded long.
Yeah, they did. And it's interesting to see, okay, so maybe this is kind of the more institutional perspective that has Bitcoin as their most crowded long. But Vonda Research, which tracks retail data from a variety of exchanges, said that there are signs that retail investors have started to capitulate as well. So it probably is not great if you get both of these communities starting to turn on Bitcoin. I should say, though, we have seen this top the most crowded list before, Francine.
Danny, thank you so much. Danny Berger there with everything going on in crypto. Now, coming up, the chip crisis is worsening as lead times climb to their highest level in 4 years, further complicating the global economy's recovery from the coronavirus pandemic. We'll have more on that next. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there has been a partnership between governments and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada is going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
Have you ever thought of bottling your happiness? And you know, you could make a lot of money if you bottled your happiness.
Yeah, you know what it is? It's just gratefulness. I should have died in that field in Iraq.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the semiconductor crisis is going from bad to worse as manufacturers get more desperate to secure supply, while the gap between ordering a chip and taking delivery increased to 17 weeks in April. That is the longest wait since 2017, when the data first started being tracked. Now, for more on all of this is Bloomberg's Asia Tech reporter Debbie Wu, who joins us. Debbie, first of all, how is Taiwan's semiconductor industry actually coping with the latest virus outbreak and worsening water shortage?
So most Taiwanese chip makers' plants are located outside of the areas that have been heavily hit by a surge in locally transmitted cases. So they are relatively okay. But the issue is that they may face further water shortage problems as well, and then need to tighten their water usage, as the traditional rain season in May has brought very little rain so far. But so far, TSMC, which dominates the production of advanced chips and then a significant portion of auto chips, said that their operations remain normal and it will still be okay should the government ask some local companies to adopt stricter water-saving measures starting June, the 1st of June. So I think by now, people are really hoping that Taiwan will be getting some rain soon, and that the government can flatten the curve pretty soon.
Yeah. So, Debbie, what are the government and companies actually doing to make sure that they can avoid disruption in chip production amid this new surge in local COVID cases?
So the Taiwanese government has issued guidelines for company operations to minimize infection risks. And they are asking companies to adopt various measures, including setting up a virus response task force to monitor latest developments. And then they are asking companies to control the flow of staff and visitors and tightening controls on the movement of their migrant workers. And TSMC is having its workers operate in separate teams so that staff on different teams won't meet each other. And then the company has also canceled face-to-face meetings. And then non-essential vendors are now banned from TSMC's facilities.
Understood. Debbie, thank you so much. Debbie Wu, there, Bloomberg's Asia Tech reporter, and of course, we'll continue watching this very, very closely. Now, also, the European Central Bank says that the euro area faces elevated and unevenly distributed risks to financial stability. In its financial stability review, the ECB this morning saying that there is remarkable exuberance in the markets. Now, plenty more, of course, ECB coverage on Bloomberg TV at 12:30 p.m. London time. We'll also hear from the central bank's vice president, he's Luis de Guindos. Now, we look at, of course, the FOMC minutes. We'll look at inflation expectations. We'll look at everything that's going on with Bitcoin as well. Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller joins me out of Berlin. Kaylee Lyons out of New York. We have market analysis. We look at Bitcoin. And, of course, we look at inflation. All of that coming up. This is Bloomberg.
valuations, particularly, sort of technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
The jobs plan, taken as a package, will enhance the net profitability of our corporations.
The vaccination is taking hold, and you're definitely seeing a change in the customer behavior.
If you had asked me a couple of years ago, would we have this kind of demand, whether you're talking about, PCs or gaming products or the data center, I would have been surprised.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Keely Lines.
Well, good morning from London, Berlin, and New York on this Wednesday, May the 19th. Our top stories today. Bitcoin goes from boom to bust. The cryptocurrency has now erased all of its gains since Elon Musk's first big embrace. The axe falls at UBS. Hundreds of jobs are being cut at the Swiss bank as part of a restructuring plan. And it's worse than you think. The chip shortage that has slammed manufacturers has now entered what's being called the danger zone. Kaylee, when you look at the danger zone, we also had a warning from the ECB looking at stability and actually saying that some of the market valuations in the U.S. could be a worry further down the line. But for the moment, the ECB not concerned about crypto at these levels.
Yeah, the question is, are they concerned about inflation, Francine? Because the equity market at least seems to be today. There is a lot of bread on the screen for equities really across the world, and that was true in the Asian session. Granted, Hong Kong and South Korean equities were closed today for holidays, but in Japan, China, and Australia, they were all lower. Actually, the Australian benchmark had its worst day in about 3 months. In foreign exchange, the Japanese yen is weaker against the dollar, as is everything in the G10 space. Right now, the yen sitting at 109.09. And then I don't usually talk about Bitcoin in my check of the Asian markets, but I am today because the PBOC, the central bank in China, issued a warning on cryptocurrencies yesterday, and that is a huge part in what is dragging on Bitcoin and its peers this morning. Bitcoin was below $40,000 earlier in the session, just above that now, but still down about 6.5%. As for what the picture looks like here in the U.S., no surprise with the losses we're seeing in equities across the world. Futures are pointing to a lower open. Right now, S&P E-minis off by around 31 points, but it is a bit of sell everything today in that there is also selling in the bond market. Yields moving higher 2 basis points on the 10-year to just around 1.66%. The dollar is broadly stronger today, snapping a 4-day losing streak, though we're just coming off the lowest level since January. And finally, crude is below $65 a barrel. WTI at $64.48 right now. You have inventories building here in the U.S., but also the potential of an Iran nuclear deal, which could mean more supply is coming back onto the market, Matt.
All right, definitely going to be watching those crude prices. And, of course, I'm concerned about the danger zone as well for chips. I want to talk about inflation right now, and actually inflation that's happening here. We just got some headlines crossing. You can see those on the Bloomberg terminal if you type, well, EcoGo is one way. I like WecoGo, W-E-C-O Go, because then you can pick from a range of colorful flags. European CPI year over year, bang in line with the estimate, 1.6%. The month-over-month figure also in line with the estimate at 0.6%. The core figure a little bit weaker than the estimate. On a year-over-year basis, 0.7%. We were looking for 0.8%. So inflation is there. It's not quite as strong as maybe the market had anticipated, and it's also really not a lot to write home about, but it's better than deflation, I guess. Take a look at what's going on in markets across Europe. We have red on the screen, and you know, if you type in GMM Go on your Bloomberg terminal, you see a sea of red as well. It is definitely a risk-off day from the Iberian Peninsula to the boot of Italy, the core of Europe, and even the UK, which has left the European Union. Everything is selling off. Take a look at some of the individual moves. I thought very interesting to see the pound coming down, the dollar really just shooting up against everything, but the pound is one of the most pronounced moves because it had been up earlier, so now it's back down. German bonds are closer to zero, closer to going positive than they have been for over 2 years now. So I think that's pretty interesting as well. And then Ferguson, one of the biggest gainers on the S&P, the stock 600, one of the biggest point additions as well, even though it's not a huge company. It's only a 20-some billion dollar company, $25 billion company, but Ferguson makes stuff to build homes, and we know that house building is a hugely, well, there's huge demand for it in the U.S. It's been tough to meet the supply, as we saw in the numbers yesterday. In the UK also, very big demand, tough to meet the supply, and that's why margins are huge at a company like Ferguson PLC, and that's why it's one of the biggest gainers, Fran, on the FTSE 100.
Yeah, Matt, I guess when you're stuck at home, everyone's thinking of DIY home improvement. And the other thing, so Weko, I'm a huge fan of it as well. It's particularly useful to teach flags to a 9-year-old during lockdown. Now, a look at what else is ahead today. And New York City reopens with capacity on restaurants, theater stores, and museums ending. Now, it's another big day for retailers with Target, Lowe's, and TJX reporting earnings. And then a little bit later, the IEA crude oil inventory report. That will be folded into what we know or we don't know about the nuclear accord with Iran. And then at 2 p.m. New York time, it's the big one. The Fed publishes its minutes from their April meeting. And my only prediction, Matt, is that probably inflation angst will be back with a vengeance on the markets.
Inflation angst hasn't really been helping Bitcoin at all. You know, if you look at the hedges, traditionally gold has been the hedge, right? And Bitcoin had been crushing gold as an inflation hedge, or at least it looked like it. Now, if you look at some point during this program, I'll show the Bitcoin to gold ratio. It was soaring, and now it's dropping big time. The question I have is, what do you do in case of inflation? Do you buy cyclicals? Because those may turn over too in terms of stocks. Gold hasn't proven to be such a great inflation hedge. Or maybe inflation is just going to be transitory, so you won't need to worry about it for very long.
Yeah, or maybe just get out of equities. The million-dollar question that we'll try to get to the bottom of. Now, Bitcoin now erasing all of its gains since Tesla's announcements in February that it would accept the cryptocurrency as a form of payment. The latest blow, a warning from the People's Bank of China. They said virtual currency is not real currency and should not and cannot be used in the market as money. Let's bring in Bloomberg's Danny Berger. Danny, we're below 40,000 or just above 40,000, but it went below 40,000. What I don't understand is that, I mean, there was kind of acceptance that China was never going to get behind cryptocurrencies.
Yeah, definitely. Well, if that's the case, and this is kind of just a reminder on that front, maybe what we're experiencing now is this very downside bearish type momentum. And momentum in these types of technical indicators are so important for Bitcoin because, look, it's not something that you can really trade fundamentals around. Sure, you can have a catalyst, you can have Elon Musk tweets or the PBOC, but when we look at what Bitcoin is doing, so hopefully I can dive into my terminal to show you this. Bitcoin earlier was dropping below its 200-day moving average. So that's this purple line on here. It is now back above it. It's now back above that psychological $40,000 level. Now, analysts have said, look, if it drops below 40,000, it could be 30,000 next. There's enough volatility in this cryptocurrency that we could do that. Now, of course, the bulls of Bitcoin would say this is just a buying opportunity, and maybe that's why we've seen some of these losses ease as we get closer to the U.S. session. Now, before I had the screen up here that talked about the Bank of America fund manager survey that was out yesterday that had Bitcoin as the biggest long. I guess one of the questions is, are we going to see people start to capitulate? This hasn't necessarily before meant for Bitcoin that people run out of it, but Vonda Research did publish a note today that said, looking at the exchanges, that it looks like retail is starting to capitulate, and that certainly would be a worrying turn for Bitcoin, Matt.
You know what? Tom Keene kept telling me around 60, 65,000, he was saying, I need an entry point for Bitcoin. where am I going to find an entry for Bitcoin? And if this isn't that, then I don't know. We're going to have Tom on later on the program. We'll ask him. Danny Berger, thanks very much for that. Let's talk about bankers' jobs. UBS has started a broad round of job cuts across its largest divisions. It's part of a restructuring plan intended to save that bank $1 billion over the next 3 years, but not good if you work there. Let's get more from Bloomberg's Wall Street reporter, Sonali Basak.
Hi, Matt. Yeah, it's pretty amazing, right? Because you have Ralph Helmers coming in first year on the job. We knew that these cuts were coming to some degree, but now we finally know how many there are going to be. And these 700 positions are on top of existing job cuts. So, of course, they cause jitters, but at the same time, we saw them coming. And we see it coming as UBS also thinks about spending money in other places, like technology. So balancing these two things really start to create a different outlook for the bank and how people think about jobs, but also probably how investors start to think about UBS and other banks that are starting to adopt more technology as part of their profile.
Chanel, there's also personal moves at JP Morgan. Yesterday's leadership shakeup has pushed 2 women into the front of the field to take over one day from Jamie Dimon. Now it elevates current co-president and COO Daniel Pinto to become sole president of the U.S. Bank. I sat down with him for an exclusive interview at the end of April, and we discussed how he handled stepping in for Dimon as an emergency co-chief executive. Have a listen.
Gordon and I ran the company for a couple of months while Jamie was in hospital, and it was not any other 2 months. It was at the time where we were making the decisions to move the company to work from home, all kind of stress situations. And we did well. And then Jamie came back as strong as ever. But we learned a lot. And we learned a lot about how to manage the company in stress times and how people behave. So you see people under stress scenarios behaving in one way to the other. So you see what do you need to work with those people that may be leaders of these companies in the future to really prepare them for this type of environment. So it was a fascinating time, very stressful, and we are very glad that Jamie's back and healthy to stay working with us, hopefully for many years.
Daniel Pinto there speaking to me last month. When we look at some of the things that we need to follow, Sonali, does it really mean that this is a clear sign that actually Jamie Dimon is now looking for a successor?
Well, listen, right, Francine, we know that these 3 executives, Marianne Lake, Jen Piepszak, and also Daniel Pinto, they have been in the succession line for a very long time. What it does is it takes Gordon Smith into retirement and it elevates these 2 women into a clearer line of succession. So it really is just a progression of what we've seen over the last couple of years. But remember, we've seen this story at JP Morgan how many times? Almost, actually none of the executive team at 2008 is at JP Morgan anymore. So the whole team now has turned over, but you have the proteges all over Wall Street. You have Bill Winters, you have Jess Staley, you have Charlie Sharp, all graduating into into CEO roles at other banks. So we'll see what becomes of these 2 women at the end of the day, which one of them ends up taking over JP Morgan. If Jamie does step down earlier, we know that Daniel Pinto will obviously be ready there to take over. He stepped up before, right? Last year even. So we'll see where this ultimately ends up, but at the end of the day, Jamie has not given anybody a timeline yet, or at least a finite one.
Well, we know you will be on top of it for us, Sonali. Bloomberg Wall Street reporter Sonali Basak, thank you so much. I do want to take a quick check on some stocks moving in pre-market trading here in the U.S. No surprise with futures lower, a lot of stocks are moving to the downside. One of them is AMC, and if it does indeed open lower today, it would be its first down day after an 8-day winning streak. It's down about 4% in early hours. Some of that meme stock momentum may be waning. Another stock moving to the downside is Tilray. It also is lower by more than 3% or around 2.5% now off of session lows. It is closing a facility in Ontario. That may be weighing on sentiment a bit. And finally, I wanted to point out Freeport-McMoRan. The materials and the miners have been having a really good run of it lately as commodity prices have gone higher, but copper losing a little bit of steam today, and that is weighing on shares of that stock, which is lower by about 3% before the bell, Francine.
Yeah, a lot going on today. Coming up, Kaylee, we'll speak with Max Kettner, HSBC multi-asset strategist, and then a little bit later, an exclusive interview with the Atlanta Fed President, Raphael Bostic. That's at 11:30 a.m. in New York, 4:30 p.m. in London, and this is Bloomberg.
Lumber prices across the U.S. are skyrocketing. A 60% surge this year sent prices to a record. And analysts, they aren't expecting any relief until late 2021.
If you can get your hands on it, you're going to buy it, no matter what the number is. And the numbers are getting higher and higher.
Tightness is acute across the entire timber supply chain. Sawmills have had trouble ramping up fast enough to meet demand, while trucking delays and worker shortages at lumber yards have added to the cost. The summer peak of U.S. home building is expected to deepen these supply constraints and keep home prices red hot.
What's happening is lumber's going up, insulation's going up, stucco's going up, concrete's going up, and that's getting passed on to the consumer.
According to the National Association of Home Builders, wood costs have already added more than $24,000 to the price of the average new house. Lumber prices are expected to stay elevated for months to come.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Francine Lacqua in London and Kaylee Lines in New York. Now, the dollar is really on the move today, and for now, we're looking at it bounce a little bit. But the interesting trend has been to the downside, and Dan Curtis, my producer in New York, has put together a brilliant chart to show us this. For those of you listening on radio, welcome on London DAB Digital, I presume. What we're looking at is a dollar against a basket of other currencies that is bouncing down against a resistance line. Now, if it comes through this level at 11.17, it could approach the lowest level we've seen since back really in 2014. So really we're looking at the possibility of 7-year lows here on the dollar. And Fran, that has so many implications for risk assets that our investors, viewers and listeners hold, regardless of what they may be.
Yeah, and it goes also back to really one of our top stories, the ECB, Matt, also warning of financial stability risks amid this market exuberance. So joining us to talk about market exuberance and otherwise, Max Kettner, multi-asset strategist at HSBC. Max, where do you see market exuberance?
Look, I think from a sentiment and positioning perspective, actually positioning indicators that we track have become less exuberant in particularly the last month. So things like, let's say, equity betas, survey-based sentiment, for example, also in volatility futures curves in equities, they've gone actually less exuberant. Where we do see more exuberance is around growth expectations. So we looked at, for example, at the breadth of surprises, for example, or looking at the breadth of GDP expectations globally over the last couple of quarters, that has become very, very positive. And typically what we see is that activity surprises, so the extent to which data surprise against consensus expectations, that typically has sort of a 2-quarter lag against the 2-quarter ahead growth expectations. And that's really where we see at the moment quite a bit of exuberance, because if we look Q2, Q3, Q4 expectations, particularly in the US, they've been raised to an enormous degree. So that is, I think, the exuberance, not so much on the market side, but very much so on the fundamental, on the macro, and on the growth side.
Well, and along with the growth exuberance come the inflation worries, Max. We've been talking today about what you should do to hedge inflation. Bitcoin seems to have washed out on that front. Gold hasn't been as impressive as it has in inflation scares of the past. And many analysts have been telling us equities are a great way to hedge against inflation. They always do. But they've been saying cyclicals may be the way to play it. Now I'm seeing cyclicals turn over as well. If I look at European automakers, for example, they're coming back down. What do you think in terms of an inflation hedge? What are you telling clients?
Look, I think if you do believe that inflation is not transitory and if it's sticking, which is not our view, but if you do believe that, I think gold is still quite a good hedge, because effectively what you're seeing in gold is it's the inverse of real yields, right? So effectively what we would be seeing is the Fed pushing back against this notion that inflation is sticky, it's just transitory. You'd repeat the old story all over again. And that would then mean actually real yields have further to decline as inflation expectations rise further. And that would then be quite good news for gold. In equities, it's not broad equities, because it can't be, because there is so much in tech, so much in growth and in quality stocks. It has to be the sort of probably the financials, the energy, mostly I would say financials, because as we see steeper curves, that would then really help financials. But that really only applies in an environment where you think that inflation is sticky, and we don't believe that at all.
Is that why you're pulling back a little bit on the cyclicals, Max? What's the thesis there?
Yes, 100%, 100%. I think if we look at inflation expectations, market-based inflation expectations, both on the swap and on the cash side, really what you have seen over the last couple of years has been an enormous correlation with base effect and energy prices. And if we look at, I'm sure you've talked about this a million times with other guests as well, we all know that these base effects are now kicking in. We know that this is now the peak. So to us, it's always been around the middle of Q2 where the peak in those base effects and the peak in growth euphoria should be coming through. So it's really the growth euphoria that makes us being a little bit more cautious on the cyclical side, and also the sort of maximum inflation concerns around the base effects and the transitory nature of inflation.
Max, thank you so much. Max Kettner, it is a conversation we've had and we'll continue having, multi-asset strategist there at HSBC. Now, coming up, today is day 3 of the Bloomberg Business Week Summit. Our lineup of guests include the former Yankees star, Alex Rodriguez, ARC founder, Kathy Wood, Binance chief executive for the U.S., Brian Brook, and the Atlanta Fed president, Raphael Bostic. It all starts at 10 a.m. in New York, 3 p.m. in London, and this is Bloomberg.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Countries that entered this crisis with limited fiscal space, with more vulnerabilities, need to be supported for the benefit of the world.
The transparency of the debt burden for the poorest countries needs to be increased. There needs to be fuller disclosure.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance, the early edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kaylee Lyons in New York. Now let's get straight to the Bloomberg. First word news on no sign of a let-up in fighting between Israel and Hamas militants. Now, Israeli airstrikes on the Hamas-run Gaza Strip continue. Meanwhile, Hamas keeps firing rockets into civilian areas of Israel. Now, Israeli media report that Egypt has proposed a truce starting on Thursday. Hamas is said to have agreed. The White House says it's encouraged by talks with Republican senators on a major new infrastructure package. The lawmakers sound less optimistic. They say the session led to no agreement on a spending figure or how to pay for it. Now, Republicans say they could go bigger than their first $568 billion proposal. President Biden is proposing $2.2 trillion. And we've got the answer to possibly everything you want to know how to do. It's in the latest edition of Bloomberg Business Week, the how-to issue, while we talk to experts ranging from movie directors to venture capitalists. Among the questions we try and answer is how to grill a cheeseburger. Very useful, especially as we go into the summer months, how to get wealthy Americans to pay their taxes, and how to land a rover on Mars. So that's essential reading, plus a lot more. It's all in the new Bloomberg Business Week.
traffic. Okay. During the pandemic, no traffic at all.
Okay. Where do you see the oil market in about 20 years or so?
Non-existent.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
This is Bloomberg Surveillance, the early edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Katie Lyons in New York. Now, there is quite a lot going on in the markets. Matt, a lot of the focus, of course, is on Bitcoin. And then it's always a specter of inflation that never really, steers away from the market anxiousness.
Yeah, there's definitely some action in cryptos. We're approaching a big round number, and that's always interesting. And on the way down after going up so high, it gives a lot of people a chance to say, I told you so. I still wish that I bought a lot of Bitcoin at like $100, $200. It's the kind of thing that keeps me up all night. Nonetheless, I think inflation is probably a more prescient concern for most people in these markets right now, especially considering, that these commodity shortages, Francine, these shipping problems, this labor shortage, all of that's contributing to a rise in prices that I can't see how that's going to be transient. But maybe I just don't have the outlook that Jerome Powell does have.
There's a wonderful, actually, piece on the Bloomberg terminal saying, this is all the things that the world is lacking of or we're in shortages of. And Kaylee, that's really playing out in the markets.
Yeah, it is, Francine, in that pretty much everything is getting sold today. Literally everything I'm about to show you or tell you about in this market check is in the red. That applies to equities. We have stocks off of session lows in Europe. We're down, though, still the better part of 1% on the stock 600. And here in the U.S., 4 hours to go until the opening bell, and futures are pointing to a lower open. It is big tech that looks like it will underperform. NASDAQ 100 futures off a full percentage point. That likely has to do with the fact that yields are also moving higher. Investors also selling bonds. We're up a little more than 2 basis points on the 10-year Treasury to 1.66%. And then, of course, also selling Bitcoin. Blame the PBOC, blame Elon Musk. Whatever the reason, we dipped below $40,000 earlier in the session. We are trading right now around $40,200, but still down about 7%. And no surprise, with those declines in Bitcoin, a number of crypto-tied equities are moving lower in pre-market trading. We're down more than 7% for the likes of Marathon Digital and Riot Blockchain. Coinbase is down by about 3.4%. And then, of course, Tesla is involved in this equation, Matt. Is it selling Bitcoin? Is it not? Maybe there's still some question marks that Elon Musk has left on the table, but nonetheless, that stock is moving lower by about 2%, Matt.
I'm glad you bring up Tesla because I have a chart showing car makers. These are European car makers, and right now, Tesla doesn't count as a European car maker, although they will start building cars in Berlin very soon, or right outside of Berlin, out by the new airport. What you're looking at is a chart entitled Shift into Reverse. And for those of you listening on radio, I will tell you, it shows European automakers coming up against a ceiling and dropping back down. A little bit of technical resistance here that we've seen over the last 7 years. We've hit, it seems, that point again. So European automakers that have run hard, mostly, Kaylee, because of their ability to emulate Tesla. Volkswagen wants to be and overtake Tesla as the biggest electric car maker in the world. We'll do that soon. But the stock prices are starting to roll over, partly because of the semiconductor shortage that's holding them back, Francine, from selling more cars.
Yeah, now with the semiconductor industry facing a global chip shortage, one company in the eye of the storm, of course, has been experiencing a meteoric rise. It's AMD. At the helm of the engineer-turned-chief executive, Lisa Su, who transformed the company from an also-ran to a chip powerhouse. Now, on the latest Studio 1.0, Bloomberg's Emily Chang sits down with the chief executive to discuss AMD's impressive comeback story and the road out of the chip shortage.
I don't remember a time in this industry when it hasn't been competitive. What I will say, though, is I'm really, really pleased with our, what we've been able to accomplish. I mean, it's fun to be able to say that, we have, really driven, the direction of computing in the industry. I mean, it's fun to be able to say that. And if I look at, some of the things that we've done over the last 5 years, we've really, changed, sort of what people expect from high performance computing. So I would say it's a competitive world, and we're going to be very competitive in the process.
Well, catch more of that interview today on Studio 1.0 at 5:30 p.m. and 9:30 p.m. in New York. Now, the chip crisis continues. Shortages in the semiconductor industry are getting even worse as users are getting more desperate to secure supply. The gap between ordering a chip and taking delivery increases to 17 weeks in April, which is the longest wait since the data first started being tracked in 2017. Now, joining us for more on this is Matthew Bloxham, who covers the media sector for Bloomberg Intelligence. Matt, we talk about a danger zone. So apart from everyone wanting to mime and sing, dodgy songs that start with danger, what does it mean? Is it more industries being affected, or just the waiting time really being at almost breaking point?
Yeah, I mean, I think it's quite a complicated picture. I mean, I think it depends a little bit on how big or small you are as a customer. I think smaller customers are, reporting lead times of over a year. And I think it also depends what industry you're in. Matt was talking about auto shortages. I think they're definitely down the pecking order compared to the kind of big consumer electronics products manufacturers like Apple. Also, there's quite a lot of things for some of these, certainly the automakers do, to look at their supply chains, how they've historically sourced chips, cutting out the middleman, going direct to the manufacturers, getting different supply in place. So it's, a complicated picture. And I think, that kind of 17-week figure you mentioned, that there's a big spread around that, depending on who you are.
Yeah, I want to point out also that Matt Bloxham covers more than just media, also obviously technology. He covers the chip sector for us and telecoms, which are, reliant on this. Such a huge industry, Matt, and so important to government as well. What's being done to try and curtail this chip shortage?
Yeah, a lot of things. I mean, we've already seen that the U.S. has committed $50 billion to develop U.S.-based chip manufacturing. The European Commission's a little bit slow, but they're also looking at projects to develop in-region supply. And some of that will be with local manufacturers, but Taiwan Semiconductor is working to develop factories in the U.S. So I think that's the main thing. I think is going to be diversifying supply into new regions and just generally ramping the amount of production. But these factories cost a huge amount of money, tens of billions of dollars, and so I think that you have to be very sure about the investment before you hit the button.
Right, and that makes the case that this is a very difficult problem to fix, Matt. So especially when we're trying to tie this into the inflation conversation and whether or not it's transitory, how long can this last?
I guess potentially, maybe a good couple of years, because the lead times on new factories are long, and you're only seeing demand for chips go up and up and up from every industry. People are demanding more smartphones. Smartphones are needing more complex and more chips. Autos are demanding more chips as we move towards EV, 5G. Everything about 5G needs more chips. So, demand is going up. I think supply is going to struggle to match that for quite some time, to be honest.
All right, Matt, thanks so much for joining us. Matt Bloxham there, Bloomberg Intelligence Tech, Telecom and Media, TMT is what we used to call it, analyst for us. Meanwhile, Tesla demand has been slipping in China, adding more headaches for the car maker, for Elon Musk. Let's get more from Bloomberg Europe Autos editor Craig Trudell. And of course, not just experience in Europe. Craig's been all over the world, from Detroit to Tokyo for us. What are we seeing right now in Beijing, Craig? Why does Elon Musk have more problems in China?
Yeah, he's been on a bit of a rough run recently. We had the Shanghai Auto Show a few weeks back where there was a customer who staged a sort of embarrassing protest for the company, and that's really put a lot of focus on, quality issues for Tesla and led to a lot of sort of, back and forth between the Tesla communications team over there and some state-run media that have been highly critical of sort of, the initial downplaying of that incident and the sort of attempt to clean up after it over the last few weeks. It's hard to parse at this point, just how much all of those factors are sort of maybe contributing a little bit to the registration drop that we saw in April. We definitely see it's very common for Tesla to have, really strong months at the end of their quarters, and they definitely had that in March. But this wasn't just a big drop off from March. This was, in April where we saw sales actually slip, below where we were seeing late last year and early this year as well. So, something to watch over the coming months, just how much this decline sort of sticks and potentially how much the company is able to sort of, navigate its way out of this rut it's been in recently.
Yeah, how much, it attracted some pretty big unwanted publicity, Craig. I mean, how does Elon Musk put it back on track?
Yeah, I think the sort of downplaying of customer concerns was a mistake that I think the company has cleaned up after. I think they sort of have realized that they need to be a little bit more sort of humble in their communications so that they don't come off as dismissive. That's important. I think there's a lot of sort of conspiratorial thinking too, even about China having some concerns about Bitcoin and just how much is some of this even being driven by the government being concerned about crypto and Elon's sort of infatuation with that over the last few weeks. It's really hard to tell whether there's any there, but what we have seen is a lot of attention on crypto, a lot of maybe a bit of distraction on the part of Musk as well. I mean, you could argue that the SNL appearance the timing was not great, just given some of these execution issues that the company has been having recently. So I guess just generally kind of eye back on the ball.
Well, Craig, I want to pivot to a different part of the world because, of course, we saw a pretty remarkable number on European auto sales earlier this morning. When it comes to Europe and Germany in particular for Tesla, Elon Musk reiterated yesterday he wants to start production there by the end of the year. Is that really realistic?
It's going to be really challenging for him. I think, the company went from, targeting around July to end of this year to hopefully end of this year. I think, in parsing Musk's most recent comments, I think, you sort of hear him kind of in saying that, alluding to the idea that it's not a sure thing. I think, the fact that the company has already been having some issues getting sort of paperwork signed off on. There's some bureaucratic issues in Germany that, the Berlin airport that was referred to earlier, folks who followed that story are very familiar with. I think this is a situation where EV sales in Europe have really taken off, and it's a real opportunity for Tesla to take advantage of that if they can start up local production. But they keep sort of changing their approach to getting sign off for this project, and that's only going to sort of hurt their cause in terms of being able to get production going.
Craig, thank you so much for the insight. Bloomberg's Craig Trudell there looking at automakers for us across the board. Now, coming up, the crisis in Gaza putting the Biden administration in a bind. We'll have plenty more on that next. This is Bloomberg.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kaylee Lyons in New York. Now, Russia is dialing back reports of a major breakthrough on the nuclear deal with Iran. A senior diplomat says that while significant progress has been made, unresolved issues still remain. Well, joining us now for the latest on this is Rosalind Matheson, Bloomberg's executive editor for international government. Ros, we have a lot to talk about in the Middle East, but first of all, when it comes to the Iran nuclear deal, I mean, how likely is it that we'll get something substantive soon?
We did have those reports yesterday that indicated something was imminent, which were later walked back. A bunch of diplomats in Europe and elsewhere telling us that that was a bit over the skis. That said, we're facing a May 22 deadline on the interim inspections agreement between Iran and the IAEA, and there are talks ongoing in Vienna today related to that. So what we might get, if anything, this week is an announcement that there's going to be an extension of that deadline. Of course, Tehran has been expanding its enrichment activities in response to the penalties that were imposed from the Trump administration. But that's only one aspect. The broader issue is actually restoring the 2015 accord entirely, with the U.S. coming back into that agreement. And it appears we're still quite some way from that. This fear from the U.S. and elsewhere is that there are still significant differences on both sides. Also, for Iran itself, of course, pressure to retain a hard line going into elections there pretty soon.
Speaking of hard line, that's what President Trump represented, I guess, in a pro-Israel way. Is there concern that, with Biden coming into office, Hamas feels they can more easily make these kind of attacks, and Iran will feel less under pressure from the U.S.?
Certainly there's the question of the role in Hamas in all of this in recent days, complicated by the fact that it's labeled a terrorist organization by the U.S., and that means the U.S. can't actually directly negotiate with it. They're generally going through the Egyptians who have played that role in the Middle East for many years, and the U.S. can't be a central mediator, of course, because of that. There's also suspicion, of course, because the U.S. under Donald Trump drew very close to Israel for a number of years, that can the U.S. be an honest broker in all of this when it comes to the Palestinian side? So those are some of the complications that are overarching the current push for a ceasefire between Israel and Hamas. And of course, you still have Hezbollah potentially coming into that equation as well.
Well, of course, the U.S. has expressed support for a ceasefire, Roz. Why is that all the Biden administration feels it can do here?
Well, for one thing, because, again, they're not able to negotiate directly with the Palestinian side, although they do arguably have a lot of capital and the ability to lean on the Israeli Prime Minister, Benjamin Netanyahu, pretty hard to do so. But also Biden has pressures at home to consider within his own party about how hard to go on Israel and how hard to push Israel on this. He also has a bunch of domestic considerations that really are drawing his attention at the moment. Some of the packages he's trying to get through Congress, questions of dealing with China, a potential summit with the Russian president as soon as next month, the G7 summit coming up in the UK in just a few weeks. There's a lot on his plate at the moment, and particularly with China, a focus on that. So it's like adding this to his list of things to do right now, because if you take the lead, then you own the responsibility to resolve it in many ways. And it's clear that for Biden, that's just not a number one priority at the moment.
Ros, thank you so much. Bloomberg's Rosalind Matheson there talking about the Middle East. Now, coming up on Balance of Power, Richard Haass, Council on Foreign Relations Presidents. He'll have a thing or two to say about political stability. That's at 12:30 p.m. in New York, 5:30 p.m. in London. And this is Bloomberg.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
The importance of computing in all products is just going up and up and up.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kaylee Lyons in New York. Now let's get straight to Tom Keene, co-anchor of Bloomberg Surveillance, who joins us. Tom, there's quite a lot going on in terms of inflation expectations, of course, the central bank and what they'll do. But then I know you'll also be focused on UBS and all of the banking sector and then folding into that crypto.
Yeah, you're going to see a lot more UBS. I think with the better news here on the pandemic, you're going to see banks trying to get back to what they do best, which is cost cutting. I do have to focus on the markets, and we'll do that through surveillance this morning, Francine, and there's been a shift. Yesterday was a foreign exchange statement, and today it's clearly within the bond market where we've seen an adjustment in the real yield in the United States, but really it's about Germany, and of course all coming up on ECB. The U.S. 10-year yield in white, that big green positive yield for Germany going negative, the pandemic, and then, Francine, the velocity of the recovery in Europe is of note, soon a positive 10-year yield in Germany.
Yeah, Tom, what also caught my eye is really the ECB this morning warning about financial stability because they worry about market exuberance. Where do you see market exuberance?
Well, I don't know if I see market exuberance. I mean, you see Bitcoin. I think Bitcoin is very exuberant this morning, but I think it's an ECB looking at the markets, adjusting expectations, and that means a tightening. That means markets getting out front. But the shift here from negative to positive yield, there's no real analog for that. We've never really seen the behavior changes we're going to see in Europe from moving from a negative yield to a positive yield. We're at an original point, and with Lagarde, it's simple. When the facts change, I change, to borrow from Mr. Keynes.
Yeah, but of course, Eurozone is quite, vulnerable to such spillovers because they've borrowed so much also, during the pandemic. And that is true for a number of countries, also in emerging markets.
It's just the news flow. I agree. The news flow is really lumpy. I was just looking at air travel across the Atlantic, Francine, and it's all great. And at the end of every article, it says, yeah, but we really don't know.
Yeah, Tom, you and I need to do a FaceTime later because I know your puppy needs to speak to my puppy and give him a little bit of tips on how to be a little bit better behaved. I'm looking forward to Bloomberg Surveillance. Tom Keene with also Binky Chada of Deutsche Bank, co-anchor there of Bloomberg Surveillance, starting shortly. Now, we still have a couple of minutes to see what else we're watching today. And Kaylee, I know you're all over the retail earnings.
Yep, more of them coming up, Francine. In about 5 minutes' time, we're going to get reports from Lowe's and then followed by Target around 6:30 a.m. Eastern Time. And TJX will be reporting this morning as well. Now, of course, this follows Home Depot and Walmart from yesterday. Both reported really strong results, but Home Depot didn't get rewarded for it because it said stimulus checks did have an effect in the quarter just reported. The question is, what is that effect going forward? Does it wane? And it'll be interesting to see what kind of commentary we get around that for these three companies reporting today, Matt. Also, I always get excited for TJ's earnings because I'm a Maxxinista. I love TJ Maxx, so I always look for that.
Do you know, interesting piece of trivia, TJ Maxx, and I've been known to hoard there on occasion. Here in Germany, it's called TK Maxx.
What?
There's no reason. I don't know why.
Yeah.
TJ, that's a name. You call someone TJ. Nobody calls I guess Tom Keene could be TK.
Tom Keene is
I am
TK.
Watching mortgage applications. As you may or may not know, I'm desperately seeking a place back in Westchester. Hopefully my wife isn't watching right now. I want to move back to the United States of America, but it's going to be difficult to get a jumbo loan. I'm watching mortgage applications. They're coming out in a little bit, and it doesn't look good. It doesn't look good for the Miller family right now.
I mean, so much information there to process. We need okay, I mean, it's lucky that we have another show tomorrow to discuss your move, hoping that your lovely wife is not watching, at least some days. All right, there's a lot going on today. It's after the minutes, of course, from the Fed. Coming up in the next hour, Ron Temple, Lazard Asset Management, co-head of multi-asset. This is Bloomberg.
We're now in the early stages of a sustainability revolution.
The battery problem may be the biggest unsolved problem in all of technology.
Every time the United States has done great transformative things, there's been a partnership between governments and the private sector.
With a willing partner to ensure competitiveness and draw in investment in the United States, Canada's going to be able to be even more ambitious.
The objective for Glasgow, first and foremost, is to keep that 1.5 degree temperature rise within reach.
The train has left the station. Investors care about it. People who work inside of corporate America care about these issues. And certainly we see that with just the broader community.
There's not enough tax in the world for private sector to pay for all of this. It's going to have to be a public-private partnership.
You ever thought of bottling your happiness? And you know, you could make a lot of money if you bottled your happiness.
Yeah, you know what it is? It's just gratefulness. I should have died in that field in Iraq.
Markets deal with a pace of growth that was so abnormally strong and is now slowing to something that looks more historically normal.
People, they don't like inflation. This is true, but they will tolerate it.
The fundamentals for most companies have been quite good, but the fundamentals for the reinflation trade have been even better. So everything has risen.
I think the risk of policy error is rising quite high.
Transitory gives the impression of over and done very quickly. I don't think that's what we'll see.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
From New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance live on Bloomberg TV alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Equity futures down about 36 on the S&P 500 stateside. Our attention this morning very much on Europe with a 10-year in Germany inching back towards zero and an Italian 10-year climbing for a 7th straight day. That's yields higher, Tom. BTP's lower.
Yeah, John, it's really a subtle move. We had foreign exchange yesterday as dominant. I agree with you. The yield space is tangible, and you see it within Germany. What I would note, John, is I did this 14, 15 months ago and got yelled at. They didn't want me to have a mask. on TV. So I'm going to put the mask on right now.
Okay.
And announce, John, that everyone in New York City is dealing with, when do you take this thing off?
So you've put it on to take it back off again?
I put it
just
on.
to demonstrate. Thank you for that.
We're living with this.
Welcome to the theater.
Super helpful.
On radio, it works great, but I just put the mask on radio. Look at that headline. European Union finds agreement for fully vaccinated travelers. That's linked directly into the markets,
That's
John.
according to AFP this morning, Tom. We still have to work out what the vaccination certification actually looks like to get into Europe, one, and whether the United States will actually reciprocate, two, because for the big airlines right now, what they want to see reopen, and big time reopen, is the London to New York corridor, Tom, and that has seized up in a major way over the last 12 months.
Yeah, I know the points guy talking about JetBlue being aggressive about one flight and then a second flight on as well. But it's really what I would suggest, John, is it links right in. I'm sorry, Madame Lagarde with ECB is actually watching vaccination and mask policy.
TK, do you think we're thinking about the wrong central bank when we consider the source of a taper tantrum later this year?
We'll have to see. You know, it's going to be a surprise along the way. George Saravelis leads with a research note this morning with a terrific chart showing the Federal Reserve System is really an unbalanced view versus the other central banks. And what I love about it is he goes right to trade deficit dynamics. And the guy from Deutsche Bank, John, states no one will want to buy U.S. bonds. We're getting into balance sheet dynamics off of the rate story.
Lisa, you've been talking about this for a while. Either yields need to climb or the dollar needs to move the other way.
And this is something that people have been looking at and wondering what's going to happen. Here's the issue from my perspective. The reopening trade in Europe seems to be going strong. If you take a look at high-frequency data, it's already actually bleeding into second quarter data. It's not necessarily even waiting for Europe to find some sort of agreement on travel. Will it be enough? Does the U.S. exceptionalism story withstand, or do people start to care about this record trade deficit that only seems to deepen as we get chip shortages and delays in shipping times?
Euro dollar 122 this morning. George Saravelis over at Deutsche Bank, Lisa, looking for 125 at some point over the next year.
At some point, though, being the key issue, because Mark McCormick of TD Securities yesterday was saying, yeah, he could see this eventually becoming a reality where you get an ongoing weakening in the dollar, but not yet, that actually it might stabilize. So timing has been such a tough issue. I don't really get
Always.
how. I mean, yeah.
Always. Dollar strength, the story this morning. Good morning to you all. Let's get you some price action. This Wednesday, losing track of the days, Wednesday, equity futures down 38, down 0.9 of 1%. Whenever I say the day of the day, I always think, have I got that right? Bond markets 165.40, yields higher by a couple of basis points. Euro dollar 122.13. Talked about that dollar strength this morning, replacing the dollar weakness of yesterday. Your dollar index 89 handle. Crude 64.15, down about 2% on WTI, Lisa, at $64.15.
So, John, you talked about how perhaps we're focusing on the wrong central bank when we look at a taper tantrum. And today, the ECB came out and had a financial stability report. They were concerned about what the potential threats are to the market based on a market that they have influenced dramatically and caused to inflate. And this is something that I am looking at in terms of what the Federal Reserve indicates. How worried are they about financial stability? At 10 a.m., the Fed's Randy Quarles will be testifying in front of the House. He's going to be talking about the labor market recovery, about possibly taper. Who knows what he's going to exactly say? I want to hear what he has to say about financial stability. This idea of at what point will the Fed taper or withdraw some of their stimulus simply to foretell or pretend to try to contract the market a little bit from frothy conditions, as they pointed out. Also today, Anthony Blinken, Secretary of State, will be meeting with Russia's Sergei Lavrov, the first meeting between the two ahead of a summit between Biden and Putin next month. And then at 2 p.m., the Fed meeting minutes. John, very interesting to see whether they start to indicate tapering, what that could potentially do to markets, and whether they'll continue to sort of double down on this transitory talk.
So we've heard from pretty much everyone, Lisa, over the last 4 weeks, 6 weeks, and I don't think anyone has indicated, with the exception of Dallas Fed President Mr. Kaplan, Tom, that now is the time to taper. It would be a big surprise to see anything like that in a minute, wouldn't it?
We're going to see economic data. You're not going to see it in a minute, John, but I would suggest things are really fluid here, middle of May. Remember, we're going to a June 16th meeting. But again, John, I'm going to link in this morning the sundry pandemic news with the financial news we're all confronting. It just, every story seems to be linked to this recovery as cases come down and deaths really get to low levels.
Joining us now is Ron Temple, Lazard Asset Management, co-head of multi-asset and head of US equity. Ron, let's just talk about the situation at the moment. There's this tug of war that we talked about yesterday with Mark McCormick of TD, a tug of war between US exceptionalism, Q1, and maybe a global synchronized recovery through Q3, Q4, going forward into 2022. Do you think it's a little bit more nuanced than that?
Yeah, I do. I mean, I don't believe in the idea of exceptionalism. I think the U.S. had a head start on the recovery. And let's admit, though, where the U.S. is likely to exceed the growth rate of other regions is we have a massive amount of fiscal stimulus on top of a recovery trade. So I do think the U.S. will continue to outpace the growth we'll see out of Europe and Japan. But let's make no mistake, there's nothing supernatural about the U.S. economy. We've just given it a lot of extra adrenaline to run on with the fiscal stimulus. And again, we need to wait and see what happens with Biden's infrastructure proposals. But we could give this recovery extra legs if we do the right thing and finally invest in our decrepit infrastructure.
Ron Temple, what is new in your equity allocation? There seem to be some real nuances now, people beginning to recalibrate for the mid-year view. What is new at Lazard?
Well, I think what's really interesting, by the way, is when you look at the indices and you see the S&P 3 percentage points below the all-time high, what you can miss is what's going on underneath the surface. I mean, if I look at from the period from the beginning of 2019 through August 31st of 2020, what we saw was a really strange dynamic where the top 10 companies in the S&P were 60% of the increase in the value of the index. The index was up something on the order of 39%. The median stock was up 23%. Since September 1st, a lot of people talk about value growth rotation. I think what's more interesting is the broadening of the market. The top 10 companies in the S&P 500 since September 1st of 2020 have been about 25% of the equity market appreciation. And if we look at the median stock, it's outpacing the S&P 500 by 1,100 basis points. So again, we've seen a much broader market. We've seen a much higher number of stocks that can deliver revenue and earnings growth. And I think there's still quite a few opportunities out there. So I think it's a really important time for people to step away from looking at the index and recognize there are a lot of opportunities underneath that number.
Sort of underneath these comments is the question of big tech. Can the S&P 500 continue to climb to new highs if you don't have participation from big tech, which hasn't necessarily kept pace with some of the broadening that you're talking about? What's your view here? Can the index reach new highs without tech outperforming, or do you expect them to regain their dominance?
I think the market can perform with big tech. I don't think big tech has to be the entire market, which was the case for a couple of years. And but by the way, I want to carefully disaggregate. I think there are parts of the tech market that were extremely overvalued, and that those share prices were driven by cash flows expected in 5, 10 years. I think there are other parts of tech, maybe some of the most notable big tech names, they're delivering cash flow right now, and they're growing it pretty strongly. So I look at those stocks and don't see them as necessarily being overvalued in specific instances. So I think, again, this is a much healthier market driven by a much healthier economy. And by the way, what I love is, the conversation you guys just had about central banks. I think for the next year or two, central banks are important, but for the first time in years, they're not the only story. I think this is much more about the fundamentals of the economy, that reopening, and what we see in terms of the pandemic hopefully subsiding into history.
Yeah, and I think many people agree with you. Ron, we've got to leave it there. It's good to see you. Ron Temple there, Lazard Asset Management, co-head of multi-asset. This was the take that came from Max Kettner over at HSBC. He was talking to the team in the early part of Bloomberg surveillance. The macro and fundamental outlook may have seen its peak, so fade the reflation trade and take some risk off the table. Now, I just wondered, Tom, whether that's worth exploring a little bit more. Have we got a bubble in inflation talk? And have we seen the peak of that yet? And what does it mean for the cyclical trade in the months to come?
The answer we don't know.
Short way of saying this, Tom, short question. What if the Fed's right? What if they're right?
Okay, what if they're right? I mean, that's a bet here as people like HSBC and Steve Major look for a lower rate regime versus others looking for a higher rate regime. Maybe in Rich Miller's story this morning for Bloomberg, the distinction between Lawrence Summers and Alan Blinder, they're not on the same page. I would go, John, to the range breakout, which you've identified as 1.74%. Essentially, we're nowhere near that.
Lumber futures, they've been hammered.
Lumber futures.
What happened to Home Depot
yesterday?
What is a
British guy looking at lumber futures?
What happened to Home Depot yesterday?
They were atrocious.
Great numbers, great numbers.
I looked for an
what did the
entry
stock
point,
do?
couldn't find it.
Traded lower.
Well,
Macy's up more than 70% going into the earnings yesterday. What did the stock do? Traded a little bit softer.
Well, and actually, if I may, Lowe's came out with
don't need
earnings.
permission, Lisa, and you know
Lisa,
that.
Lisa,
I'm
Lisa,
trying to be
you may.
polite.
Lisa,
We're starting
you
the
may.
show. Let's start on a polite note. I'm trying.
How rare. Lisa, you can
It's
comment on Home
transitory.
Depot because of the three of us,
Thank
you're
you.
the only one that's been in it.
Hey, you built something recently for BetBell. I'm looking to, for example, at Lowe's. High expectations after the Home Depot results. They just came out smashing expectations. I mean, really, if you look at their earnings per share, more than double what they were last year, or perhaps almost double where they were last year. The shares lower by 2.5%.